Good morning. Uh-oh. Nice save. Good morning, guys. Welcome to another edition. It's Wednesday. We have beaten the halfway mark in the month. It is the 17th. Again, short week. We're on the short bus this week. A lot of mornings. Morning, guys. All right. Today, coming from yesterday, let's start by talking about yesterday. What was yesterday? Yesterday was a break-even day. If any of you had a hard time yesterday because of a big market pullback, you're exaggerating and you're kidding yourself. Yesterday was not a market pullback. Yesterday was a break-even day. So if you had a hard time yesterday, then you must have had a really hard time over here, and you must have had a really hard time over here, which means anytime there's any sort of red candle, you must be having a really hard time. You shouldn't be having a hard time in those days. Every day should be pretty much the same, and you're going to have to react a little differently, but none of them should make you sweat. All of them should make you sweat, or none of them should make you sweat. You shouldn't change your mood and emotion just because of the color of a candle or what you perceive as being a big buy day, a big sell day. You don't get to make the rules. Price is price. This was a break-even price. See how this close here and this close are basically the same price? That means that's all you need to know. Okay? So I want to start off with that. In terms of where the price was, it was certainly just sideways trading, right? We opened high. So if the rationale, and again, I'm just going through this quickly, if the rationale is that, we opened high and then we closed so much lower, okay, well, that's a different situation, and that has nothing to do with an actual trend in the market. That means you're just thinking intraday, right? And so when we think about price, again, I say it a lot, but it's important to keep reiterating, we don't think about what price is going to be in the next 15 minutes. Not to say we don't take it into consideration for our trades, but in the overall macro sense of what we think about where is price going to be in the next week? Where is it going to be in 2 weeks? These are ideas that we need to keep in mind so that a day like yesterday, you don't have price open and then close lower and then, wow, big sell day. Rough day for me, guys. My average, I bought up there at the top and I had a tough day, right? That mentality is a bad one. Don't have it. Just remove it. So, again, that's silly. And especially when there's there's 20 other people in the chat celebrating buying over here at these lows, being risk on, buying on other people's fear. What you're doing of causing fear up here, you're doing it to yourself, right? Maybe you read it in a headline. You're doing it to yourself. It's self-imposed. If there was an actual reason, then you need to be able to react according, like when we sold over here on that Monday before the market downturn, right? But that's not even a fear-based thing either, because it hasn't caused some sort of emotional response. So you can't be emotionally finding your way through things and trying to change up the way you trade every single day. So I want to keep this in mind, because today, what if we trade flat again today? You're then using that mentality once again, as we just go into the intraday chart here. You're then using this mentality again to tell you, well, you know what? The market average was down from open into close, so there's not possibly anything I could do to make money today. That's just how it was. There's just nothing I could do. I spent all of 10 minutes looking at charts, reading some news articles, and you know what? Based on what I read and what I see for these 10 minutes that I've worked so far on this, there's just nothing I could do. I lost money, and it's just so unlucky. You could tell I'm extra thorny today. It's going to be a pretty thorny day, okay? That's ridiculous, okay? That's just ridiculous. And I want to make sure, just going forward still, that we're celebrating people's hard work in here, because there's a lot of people in here that work very hard. They're here every single day. You see the same people here every day, and this is what they do. And it's the hours they put in. It's going to the broker, and it's such a pain in the ass entering all those tickers into your broker, getting all the orders ready, right? Those kind of things, and looking through the charts, right? Looking through tickers. These people that are doing that are getting success because of their hard work. Those of you that don't have as much time, I do want to remind you, you need to think about strengths and weaknesses as a trader. If one of your weaknesses is time, then you're not going to be able to get the same returns as those that are working 10 times as much as you are. Maybe you're working hard too, but again, that doesn't make up for the difference. Or you may think you're smart, that doesn't make up for the difference in the time, in the effort. Okay, so keep that in mind, especially going forward, because a day like yesterday, I can tell from the reaction from some people that a day like yesterday, I talk about that we love these kind of days in this group, because these are the days that the charts that we're tracking and the velocity that we're trying to capture, that idea of alpha beating the market. These are the days that we do the best. And I think days like yesterday, especially people that join the stream in here, when they see there's like 20 different tickers that we're getting like 10% over the underlying, and we're really popping off and having a great time, other people then go, oh, well, that's just unfair and I got unlucky. No, you just didn't do it. You didn't do the work. Maybe you didn't have the time, but you missed it. Don't act like, oh, well, you know, I know you guys were in that, and so then I bought it 2 hours later and I lost money on it. It's like, well, because you bought 2 hours after we bought 100% lower, right? That kind of thing is not going to fly, and I'm extra thorny today, so if I see any comments like that, you're going to get called out, all right? That's ridiculous. Something like CCL yesterday, like, oh, Don, listen, man, like I bought during lunch and I lost money by the end of the day. Buddy, it was up 10% from open to lunch. Do we need to answer that question? That means you're not following rules, and you're not learning, and you're not even really thinking about anything, right? I don't care what you do. So keep these ideas in mind. And again, it's important going forward that we continue to celebrate those that it's not just successes, it's learning, and it's getting better and trying to be better, right? All the time, whether you have a bad mood or not, doesn't matter. We're here every day. We do the same thing every day. Listen, we're all human. We're going to have bad days, right? But you don't see me coming on here on my bad days bringing the group down. We do it the same way every time. We trade the same way. So it's important to continue that, all right? No matter what's going on, we don't, just because of something that's going on. It's like if you go to work, right? Those of you that, which is very few people in here now, those of you that go to work, you're having a bad day, you don't ruin the rest of the people you're working with's time, and you don't then make poor decisions because of something that's going on at home or something, right? You're a doctor. You don't go, well, shit, you know what? I need a smoke break. Sorry, but this surgery is going to need to wait. Sorry. Or, listen, I got to go to my other job. I don't have time to do this surgery right now. Sorry. Got to go to my other job. And then you go, well, it's just unlucky that I have this other job and I don't have time to finish the surgery. Like, I'm sorry. I'm sorry, parents, but I literally don't have the time. So I got to go. That's silly. Yep, I'll jump to the IWM chart. I am going to show, so again, IWM chart, we're getting some consolidating here. Again, we're still within this zone of supply. I'm going to make a sort of a transition here to an article talking about value in growth, right? So when we talk about value, these tickers that are retracing, we use the small cap chart as sort of a baseline, this idea of value, those tickers that are going to find value as we go forward because maybe they're still below their COVID lows, the COVID highs, and coming from that low still, they might have like 20, 30% to still retrace. Those are value tickers, and then growth being big tech and the like. And we saw sort of yesterday maybe a bit of a shift into tech. There's some ideas, obviously, from institutions that there's liquidity there. They've been really beat up. Now, the big thing here to see is that the Hang Seng has now become really a dominant player, and it's important. I know I've been talking about it more and more recently, but I think it might have slipped through some of the cracks. I want to make sure we're understanding on a macro standpoint. And again, you have to look at everything. You can't just look at one chart and act like it's that's all by itself, right? Again, we look at everything here. We look at all the different indices, all the different markets, the dollar, how that's reacting with volatility and the like, right? And so it's important, this concept I'm going to talk about here, because again, we talk about flows a lot here, flows being just whether it's an inflow of cash or an outflow, it's important to understand the flows. Again, flows over fundamentals, right? So I'm going to bring you over to this article over here. This is just from Financial Times. Hong Kong stock trading volumes jumped to 4 times those of LSE. Again, that's the London Stock Exchange. Of course, London Stock Exchange has sort of lost some of the favor since Brexit. It's now the Euronext is actually trading more than London as well. So this is more of a classical example, but it's still important. So that's the other note, is that obviously previously known as the Amsterdam Exchange is now the Euronext Exchange, which includes Brussels and Paris included with it. They all merge together, and so that makes up really the largest European index now, for those of you that didn't realize that. And so still, though, that this number here, this number is pretty impressive to note. And this is a flows idea. So when we see the Hang Seng doing so well so far this year, this is because of the flows, right? This is cash going into that market that's just propping prices up. It's important to understand this concept, because that's exactly what's going on in our indices, right? In our equity market. It's just constant flows, right? This idea of cash entering the market that props prices up. The idea of the Fed, right? When we joke about printing money, right? It's not a joke. The Fed is providing $120 billion worth of cash into the market every month. That's a lot of money, right? And that money then gets put in the equity market in different ways. But it's important to note that it's sort of like when we talk about, you see the ARK ETF, right? The ARK ETF isn't going up just because of the tickers that are within it and it's benchmarking the price higher. It's because of the money that's flowing into it. It's the flows that are actually causing it. That's why when you read those articles, they always talk about the cash that's actually came in, and not that the price has risen on any individual ticker or something, right? So it's important to understand the flows. And I just want to show you this chart here. It's really fascinating to see. It's a significant number. It really is it's a significant number compared to the New York Stock Exchange. New York Stock Exchange is $44 billion turnover. That's the average daily turnover. It's $44 billion. You can see here. So it's not like this is small. And we got, of course, the U.S. equity market is being about $30 trillion is a massive market. But this is really becoming something important, and this is tied to the tech side, right? Tied to the tech side. So keep that in mind as we go forward. This idea that tech has become a very flow-based system, and it's important to note that, and I talked about this a bit yesterday, that look at this chart. This is the NASDAQ. We're looking at the Qs here just as the ETF, but this is the NASDAQ, and we talk a lot about how value's been trending, but this is just constant flows here. And the reason why people still go into tech so much, again, during earnings is always beating earnings, this idea on a fundamental level, always beating earnings, and then always having future growth opportunity. That's something that's always going to stick there, so it's always just getting more and more capital all the time, right? Now, we've looked at the mega caps, and a lot of those are quite far behind this, right? But this right here, all this is flows, right? Since the COVID bottom, all that's happened here is there's just more and more money consistently coming in, right? You get a consolidation, but guess what? You just continue that trend. This is not some sort of, like the valuations are continuing to trend here. No, this is just the amount of cash that's coming in every single day, every week, every month is just constantly the same. At sometimes it's at a lower pace, right? Sometimes it's a little bit less. Sometimes there's a rotation. We switch to a different industry, different sector. But this is just constant flows, and that's what we're seeing on the Hang Seng. It's when that stops that corrections happen. So I saw a couple more articles, and again, I've talked about when there is going to be a price move, it's going to be violent. It will be a correction, right? But we don't start to get scared every single time there's a red candle. That kind of goes with what I just talked about like 10 minutes ago. You'll see it. You will see it across the entire, not just this market, the entire world market. Everything is tied together. We talk about how does, we joke about, like, how does he keep getting away with it? The way we time these individual actions that happen, and again, those of you that are a bit newer that don't know, You know, when it I talk about this a lot. When it comes to understanding when a market pullback is happening, the media in this sort of dynamic that's been created, Wall Street imposed, is that, oh, it's impossible to know when it's going to happen, right? The Big Short came out and it was like, oh, Michael Burry, the god, how did he know to bet against the housing market? What an absolute amazing bet, this kind of thing. It was a great bet, but everybody knew it, right? It was just kept from the public. Oh, if only we knew in September that the market was going to pull back, right? Oof, that really hurt me, like that kind of mentality. No, no, no. We were out before this happened, right? You can see it everywhere. You see it everywhere. People don't just all of a sudden start to sell. And I've been using this garage sale analogy a lot. I think it's a good one. To start the garage sale, you've got to put everything out front in your yard, right? You got to put it all in the yard. Tell everyone how much you're selling it for. Those signs are also in the market all the damn time. You know when everyone's getting ready to put all their shit on sale, right? You know when there is no such thing as oh, if only we knew. Sometimes there are there's flash crashes that happen, but that's not from a behavioral standpoint. That just algo's fucking up, right? Over here, we sold on that Monday before this pulled back. Again, this is not even a very big pullback, but we can see it everywhere, right? And so that's, again, in terms of this group, the best thing I can do is always keep you on the right side of the market at the right time. Up to you to use opportunity cost to get your positions to a better position. Taking those lower valued assets, bring them to a higher value. That's profit. Anyway, I think these are some good concept to come in with today, because again, it does get a little, we've been, if you think about, for those of you that started, somewhere in this area where it was very difficult to trade, but we've really kept a lot of the same mentality since this pullback here in this group. I've kept it pretty similar, and I want to make sure that we don't all of a sudden start to change things because of where we are now. This mentality that we had back here, we've really kept the same mentality the whole way. We've changed and adapted accordingly. But the idea of this trend has not changed. It's important to realize that this is the trend line that we drew back here. This trend line, if TradingView had an option to see the length, how old the trend line is, this trend line has been here since this over here. This pullback, this is where we started to. This was very difficult trading, and then it was right over here that we said, oh, this is a buy opportunity. That's a buy on fear opportunity. We even had to get a new sort of. We didn't have these trend lines. This was just like a horizontal in here, and then this trend line we really understood as being okay. That is the velocity in which the market's going to be trading on, and we understood when we were overextending because of this trend. And so I just want to keep the basis as the same, that this is the trend that we're on. It hasn't changed in like whatever amount of months that is, 7 months or something. So don't change up the idea because of one individual day. It will be noticeable. You will see it. Let's go over the other macros. We get what do we got? 10 minutes. Again. Those of you that were here yesterday, watched the recording. Wow, I can't believe that this dude talked about the dollar over here, talked about these two converging lines, and then the dollar quite literally went right through those two converging lines and is up here like they talked about. Right? What an absolute surprise over here. Cannot believe it. This move was very expected, right? Very expected in terms of the tightening here and the converging levels of supply here. Price wants to move through that supply. Again, supply is just a bunch of liquidity. It's a bunch of sellers in here, or if it's below, it's a bunch of buyers, right? Price is going to move there. There's no such thing as like, oh, it's like if, you're driving on the road and there's, maybe the driving is a terrible example, avoiding cars. This is not avoiding, but either way, this is price moving through the supply levels that is to be expected. And so again, this move here, I've talked about, is different than this move here. We understood over here we had a little bit of fear. We didn't know what kind of dollar move. And again, if the dollar is going up, then the equity market is usually doing the opposite. Or if the equity market's going down, this is going up. Or if the equity market's going up, this is going down, right? That idea of correlation. We understood there wasn't much correlation over here, other than this was a bit risk on for the equity market, right? We were actually taking off during this and also took off during this. Over here, we can't, it's not the same picture. Over here, we're looking at it as a little bit more safe haven in a traditional sense, a little bit of risk off possibly. That doesn't mean that this is an outflow from the equity market. We need to see that, right? We need to see an outflow from equities, and that is coming here to the dollar. We don't exactly see that, but we're going to be pressed to watch it during open, right? And watch today. If they're selling from open, and again, futures are basically break even, or at least under 0.5%. There's not really much. So we haven't seen an outflow yet. We're going to be watching that and seeing that if this is in relation, because that's how we go through our thought process. You got to have a checklist of, okay, is this happening? Is this happening? Let's watch. This is about the same percent as what the futures are at. So, again, it's possible that, let me just reload this. It's possible that there's some things there. You can see the NASDAQ has lost the most. It basically had the largest inflow of anything, right? It's because of some liquidity reasons. We saw, for instance, on Friday, that big spike at the end of the day. That's probably some of that coming off, right? And so keep this in mind and understand that about 0.5% or so, this could certainly be money just going to the dollar for the idea that, okay, we might be a little bit too top heavy here. We need to manage risk. And again, here's the spot VIX. We're watching this for movement. If this starts to creep through, we already started to creep yesterday. If we start to see this creep through and start to move, we're going to react. So again, it wasn't yesterday that we need to react. Today, we're watching to see if we need to react. These type of things, you don't get to decide when it is. You don't all of a sudden get to decide. You don't know when it is. All we can do is react. We push positions until something triggers one of our stops, which means you don't need to do anything. Your stop should be selling for you. And then the possibility of that you're in the profit. And so then you're deciding when a reversal day comes. I always talk about it. One of our ideas in terms of rules is this 2 daily candle idea, where you've got this red candle here and then another red candle forming in here. Now, this is not a good example because I would not use this as a pullback day. Usually we like to look for a lower low or at least a pullback through halfway through the candle here. A good example would be over here on the Russell 2000 chart. If this starts to sell, breaks this trend line, then that's exit every single one of your positions that's tied to value, right? And trade those other ones to the upside that are doing well, right? And so that's if that happens, though. That means your stops are already there. That means if you did prep, you already know where this is on your charts, and so you don't need to do anything, right? And so what happens over here? Well, again, I'm not going to use like these what if sort of things, but again, what we look for here is that this is a trend line. It should be bouncing here and turning. The bullishness of the market should push this to the upside because of the fact it's a support, right? That doesn't mean that this can't happen. We'll react accordingly, right? We have some short ideas. We have ideas for any situation. All we can do is plan and react, right? That's the idea in the market. Again, what I sort of said yesterday is that since we're opening lower, I don't know the exact numbers on the ETFs. 390.69, nice. 390.69 is still above the trend line. On the IWM, 223.80. 223.80 is about right here. It's about this level in this horizontal. So this can be a very important moment. I talked about yesterday, though, that likely if we're opening lower, you start off very bid. This is opening like 1% lower. That reaction that you get from the very open is your yes/no decision of, are we opening bid? You'll see it. You will see it. You'll know if you're opening bid. If not, then you're selling. A lot of our positions are not reacting pre-market on the negative side. That is something to be careful of because I think a lot of you take pre-market action to like heart and you're like, oh yeah, like look at my big numbers up here. And then, we obviously have some very big numbers. And again, there's like two charts that I posted, the AQMS and the CBAT chart that are from yesterday. They're up quite a bit from open. That for the CBAT chart, that's actually perfect. It's going to open right above this level of supply. That's a great entry there. That it would have been very tough to enter within here. If you didn't enter over here from when we originally talked about it, it's a great entry there. If again, yes or no decision, is it going bid? Perfect, I'm going. When we look at some of these pre-market numbers, again, a lot of it is just continuations. But on the sell side, so again, pretty good pre-market numbers for some of our charts here. But on the sell side, when you look at some of these things, some of this is like hard to react to, but you need to just know from a rules-based standpoint what you should be doing, right? You just need to know what you should be doing depending on the position. Something like this here. You're in the UMC position from over here. You've got this breakthrough the trend line yesterday. It's about a break even. You lost about 1%. If this starts to sell from open, right, it's at 2%. If it starts to sell from the open there, then of course you're taking profit. You're starting off at 1049. It's about right in here. If you start to sell from the open, then you're taking profit. That means you can re-enter at a different time, right? If, let's say you're on, well, I hope you're not in plug. That would be ridiculous. There's a few examples like the fake Neo chart, right? Let's say you're in this chart from over here. This is opening at 47.60. It's already crossed your relative reversal point if you had entered from the open here. So that means you're taking profit. It's a rejection. It's a rejection. Now, you should have already exited this likely yesterday when this line broke, but there is some possibilities that options didn't move. The idea when a level breaks is that if you pass a level and then break back down, I always talk about it, you want that confirmation bounce because this can happen and you can get hurt. You need to be, of course, looking for this bounce, right? Now, that didn't happen yesterday, and it's a little bit shady yesterday, which is why if people are in it, you're reacting today. So if price opens bid, then you're reacting to this resistance level. If price starts to sell from open, then of course you're selling before you hit your break-even point, right? You don't need to wait for the stop to hit if you can already see it, right? You should already be ready to hit that button on these positions. And you don't get to react and say, oh, well, I do expect it to go up, so I'm going to let this one slide and I'll just hold on to it. No, you can rebuy later. You can rebuy later. It doesn't matter what's going on in the market either. You don't get to decide when price is going to move because it's convenient to you. And you don't get to hope and say, oh, well, I really hope the market's going to be bid this open. I really hope so because I'm in some really bad positions and I'm going to be complaining if it doesn't go my way. Really wish I had more than 10 minutes to trade. These kind of things, like, no. We react. I love this chart, the way that we're trending. There's some really great trades out there. Again, these like charts like this, like if you took this trade and then if you complain on like a chart like this, you need to understand that a 9% day like this, usually you're coming down into here this next day. Realize what you're in for a position that today, if you were up 100% or more on this chart yesterday, you're going to be losing 20% today. Are you going to be able to handle that? To be able to go make another 100% the next day or the next week? Like, can you handle that? If not, then you should have already sold yesterday. You already know if you're that kind of person that if you can't handle the next take profit day after a almost 10% move, right? You knew it already moved this much and that the next day you'll take some points off because of take profit. If you can't handle that, then you should be exiting beforehand, not the day it happens and say, oh, I had a red day. I had a red day today. It's like, well, you made 100% yesterday. Not every day can be green, right? Keep that in mind. Keep that in mind. And I know I'm being thorny, but I'm trying to spew some ideas out there. All right, let's get this going. Get your things ready. I'm sure there's going to be a ton of different trades to enter today, guys, or trades to manage everything, right? There's a lot going on today, so stay frosty. Peloton volatility is awesome. It's great for trading. So I don't know what it's going to do in 2 months or something, no. But it's certainly great for our style of trading. You just got to follow rules very carefully, right? Of course, there's extra risk involved, but it's certainly great for trading. You have to. I mean, again, we love volatility. Like there's no other way to make money. All right. CBET opened a little bit lower than that supply. And again, do not, even though we think about the market average and we watch the market average, do not let the average dictate what you do decision-wise on your other positions that could be doing something completely different. Almost every single ticker that I post is on its own velocity. That's why it works, right? Because it's on a different schedule. There's a reason why those positions you can make more on, or that have more volatility than the market, right? Don't let those decisions fool you, right? There's things like X from yesterday. If IWM starts to sell today, are we going to exit X because those are like tied together? No, that would be ridiculous because we have like 20% underlying upside on that chart still, right? We made 100% yesterday, right? Even if you enter from open, I think you made 100%. We came from last week with that position. That was a significant move, right? You don't go, well, you know what, the market's selling, I'll just take profit here. This is the top. How do you know? Okay, holding this level so far. Certainly some positions taking off, and again, don't respond differently depending on the day. If your position that you're in is starting to sell, don't say, oh, well, you know what, the chart's bullish, I can hold through it. You can always buy at a different point. And then don't say, you know what, if it then makes another 100% move after, go, well, I sold it, so there's no way I could have possibly rebought into it and captured that next move. There's just no way. I sold it last week. I can't possibly rebuy that and make the money on it this week. I was just early. I was early, but I wasn't wrong. That excuse is stupid. Stop. I was a month early, but I wasn't wrong. I just didn't make the money on the chart. No. Across the market, tech over here, let me show you where the trend line is. Right here near the trend line. And also we know that that's a zone, so it's actually not below it or something, it's just right within it. And then here is the IWM chart. Right across this horizontal. But everything's holding so far. We're waiting to see, right? We have to wait. You do have to wait. We don't, in terms of an intraday understanding, it's certainly starting bid because you're holding, but you have to see it first, right? E-bond continues from yesterday. AQMS, we're watching to see this. You could certainly get a little frisky in there. VIR, AGTC continues again. Bios, healthcare being one of our big sort of sectors of understanding. We talked about this trade yesterday. I talked about even looking to transition this trade. It's a whole new day. RDHL continues, of course, been one we've been trending on. ALT has always been a good pick. Been trading this. This is one of the charts that I made the most on during COVID winters, right? Trading this over here was significant. CBAT, we're waiting for that supply. You can't buy it right there. You have to wait. This is most likely a support buy, if anything, today. And again, Chinese tickers continue. NDP, that's a very nice move there today. That's a big move. Again, this chart's been extremely bullish. I think there's a few people who have been trading this one. Again, volatility. We're watching the derivative chart over here, that trend line especially. Trend line on VXX comes in about 1647, 48. That's an interesting spot to think about. X coming into the resistance here. Important to note. But again, if you're in this position, then there's literally nothing that could happen on this chart today that could shake you out of that position. I don't care if you lost 70%. Even if you lost 70%, I would find it very hard to exit that position because of the way that you're never getting that average entry again. And even if it took a week, you would still have a better average over there. And I'm more about getting stopped out. I don't sell. I'm not saying that you wouldn't get stopped sooner. I'm just saying. There's nothing I would do. I wouldn't purposely hit that sell button. EH is still trading on that trend line over there. This is of note since that was a hit piece. And we've seen this before where this could just be one institution And a lot of times, look at if it's trading on the technicals here, then there's something obviously a little up on the chart. There's something up on the chart where if this is pulling into that, there's a possibility of making some points there. So you want to have some fun. Again, it's only shares, so you can't really get. It's not like you're not going to be able to get out of that position eventually. There might be some fun there today. You never know. You never know. Again, we look at price. We don't really look at. I don't need to read the hit piece to realize. I can see it in the price. Let's go to the sell side. Is there anything interesting in here? I think something like Z. Again, is a good example of if you're in this position from anywhere in here, even if you transitioned here, you need to realize where you are and what you're trying to accomplish. Today, you might have a red day on your Z position. Okay? But this is taking money off the top of your profit. And you have to be able to push through these sort of things here, right? Imagine thinking that from the sort of the origin of this breakout move that, oh, well, you know what? Lost 5% today. It's just not going to go up later. It's just, you know what? I'm only thinking about today and price. You know what? You know what happens after a loss? Price completely stops trading, right? Completely stops. No one trades it anymore. No, price always continues, right? Price always continues. Don't think about today. Think about where's it going to be next week. If the answer is up, then you can push your position. If you don't know, well, then trust in what price is telling you. You don't need to know. Trust in price, right? Trust in the trend. If it changes, it changes. But you don't get to make up. You don't get to make up the decisions for yourself. The Sun Power move is continuing on this path that I talked about from yesterday. This move from yesterday, the breakdown into here. So again, we're looking for, and I changed the color just so we could see it here. This trend line down here, I moved it from. It's just a copy of this trend line. It's kind of where we're going. This is not the support. It would be more this one. But if it does bounce here, then we have an understanding of where that's going. Keep that in mind. Something like the Chegg position, of course, you're getting out of that position. So it's certainly possible to get hurt on that trade. Nothing you can do there, right? That gap over the trend line, that's an instant sell from open stops. This is just a bunch of stops getting hit by, again, they're all market orders. So all the market orders just hit a certain level, right? There is no such thing as, well, I misplayed that, right? You didn't misplay anything. If you were pushing that position over there yesterday, you did nothing wrong. That's going to happen. That's a part of variance, right? It's going to happen in variance that it's going to gap supply. That's how gaps work. You know what's likely tomorrow is a gap the other way. If this holds right here, I would say the gap chances are probably even higher than the gap down chances here from today. So keep that in mind as well. Let's see. Anything on the sell side that's interesting? Peloton, that was mentioned earlier, is obviously very interesting because this is a different move from over here. This is a different move from over here. And again, if you had entered this position from Friday, there's multiple times yesterday that you would have been taking profit before you even got close to your break-even point. So this move here today, coming down here, is really interesting. Now, this is not a trend line break here, right? This isn't a break. This is like a rejection into the trend line, and it's a little iffy over here. But if this is a break and we see it, then that's a short opportunity for sure. So I'm going to keep that in mind. Even though we just talked about how bullish this chart is, the fact that it's made this move, it really turns into a breakdown, right? It broke this now. Now it's a little bit closer to the converging trend lines near the apex, so it's not as bearish, and it's still holding the support. So we'll keep it in mind, but it's certainly something noteworthy, I would say. All right. S&P, I know some of you were like, but Don, your SPY is pulling back. There's the trend line. There's the trend line bounce. Again, this week is different. We're not using the same mentality of buying on the fear, right? We're more in management mode right now and entering our positions that have their own velocity. So, last week I was like, oh, we're buying on this move. That was over here, though. That was all of this, right? All of these pullbacks, we were buyers because of a mentality that we were trending, and there's more there because of the dollar wasn't breaking out, volatility wasn't up. Over here, we don't have the same mentality. We're not, oh, we're going to go buy it right here because Don said we're buying fear and pullbacks. Nope. This week's different. It's different every single time. You can't use the same, you can't say, you use the same sort of mentality day to day or week to week. That's like the indicator traders that think you can use the same indicator every day to buy or sell. No, sometimes they flip and they mean a different thing. Not to say that this can't go bid, but we're not, going all in on this move here. We're going to buy our positions, but ours alone. We're not buying through we're not going to count on the market. Those other pullbacks, we were counting on the market to go bid. We're not going to count on anybody. We're going to stay in control, right? Staying in control. The top of the list continues to grow. That was quite some price movement there. And again, something to also note still is that those recent charts I posted, again, even if there's been a recent volatile move the other direction, those charts are still, I mean, most of them have just continued to trend up. So some of them you've already missed, but some of those charts, again, that haven't really made such a move, remember, those most recent charts I posted, breakouts, are really what you want to be looking for. If it's coming into support, about to break a resistance, trade on a trend line, those are the charts you want to be getting involved in. Again, the levels are there. Those are going to be the charts. Again, what I'm looking for right now are those charts, which are all I'm waiting for is a little bit of bid to show me that it's coming off and breaking out of the level, right? If something's just trading along a trend, sitting on a support, I'm just waiting for that bid to come through to actually go get it. I'm not going to just sit in the trade. But those charts, from the confirmation we've got over the last 2 weeks, those are the charts, right, to get involved in. So don't tell me, well, listen, Don, I did some due diligence and I read some articles, and based on those headlines I put together and other people's opinions, I think this is a chart that we should trade. That's great. If I wanted other people's opinions and journalist opinions, then I will read them. It's certainly not going to dictate trading. All right, this is a pretty good, when we think of like our first 15-minute candle, this here is going to develop into a very nice candle, but it's also a very difficult decision coming into 10 o'clock for some of the big boys, institutions. This needs to lift. This needs to lift this way and start a little bit of a trend. Maybe the next 2 5-minute candles tightening a little, but towards the upside. Otherwise, you're not going to get many buyers in over here. It's going to be very difficult unless the NASDAQ continues this sort of trend to the upside as well. It's going to be a little difficult here in the open. This sort of move here. You can see that if it tightens this way, it's going to roll back down. If it keeps tightening this way, it will roll back further down. Those bids that come, there won't be that usual bid that comes in. So this is tightening. So over the next 10 minutes or so, leading up into 10 o'clock, that last 5-minute candle into 10 o'clock should be interesting. Now again, even though I said it's not the same as buying fear last week, that's from a market perspective. Our charts, we are certainly buyers. Again, if the support is there. So these charts that are all break even, that are just kind of hanging out, maybe they pulled back from open. We are buyers. We are buyers. The bias has not changed. Yeah, CBAT is, again, it's actually probably let me just, maybe we'll give it a little while because I'm not gonna, maybe I don't need to. I'm extra thorny today. When I mentioned something like this at open, I posted the chart last night, and we've talked about it before. Brian originally brought this up. I looked at the levels. We liked the chart. I like the stock. this sort of entry here, again, when I talk about it being a yes or no decision, if it opens on support or for breaks resistance, you've got to make that decision. Now, some of you are going, so should I buy it right now? That's exactly where maybe I had paused to even bring up this comment because, well, here you should be waiting for the pullback into support here. And if you miss it, well, then you just missed it, right? You want this pullback. So this move that just happened from here to here, this is the ideal move, right? That's the ideal move. That doesn't need to happen. That doesn't need to happen. And that's why we just buy from open, because if you don't buy from open, then now you're stuck in a hard place because, well, anything could happen. Well, exactly. Anything could happen from open, but we follow our rules because it makes things a lot easier. Now, you could say that this move bounced already on the support, which for something this volatile, I would say already did. This move through, it pulled back, right? If we put it on the 1 minute, you'll see it. See this? It pulled back and then it moved. That already happened. Now, that's on a very fast time schedule, so that doesn't really get to count. But still, this kind of move, again, listen, anyone complains about, this kind of thing, I don't care. So it's not gloating when it was talked about beforehand, right? That's the big difference between this group and other phony groups. The other phony groups post shit after it happened. We do it beforehand. And it's on record. Forget about it. Make those lines green. Green means go, right? Red means stop. You guys ever play that game as a kid 40 years ago? Red light, green light. That was the game when we didn't have cellular devices. Well, we had the big ones. Calling Jenny on the Nokia. What's up, Jenny? Want to ride our bikes? I'll pick you up. I got this new bike. Okay. So again, when I talk about the move, this is a very good move in terms of what we're looking for. What would it mean in terms of a big buy signal, like for us to change our mentality a little bit, maybe like last week's? You would need the dollar to turn and volatility to drop with it. Let me show you what that looks like here. Again, I wish I could show you guys a bigger screen. Do you see the dollar turning, breaking down here? No. The movement would look like this. It would look like this way. Now it's consolidating and tightening, and it could possibly do that. But it's not showing us that, so we're not going to change sort of what we came in with the day. Now volatility is doing it, but we know that this is in relation to S&P futures just being bought right now. That's not even helping us with anything. It should technically not even be moving, but that's, again, we know the spot VIX is a little different. If you actually go look at the VXX, you'll get a better idea. See how this is all flat? That's how it's supposed to look. That's why we only look at the derivatives, because again, the spot VIX is it's quite literally just a mess. It just follows the S&P futures. You can just look at the S&P future chart and put that chart on the damn thing. That's all it is. Sometimes it's different, but it reacts so violently to what happens on the derivatives, right? Again, bets causing something to happen. Which, by the way, I hear we have a very big Bet Friday coming. There's a couple floors doing some pretty, as the kids like to say, gnarly bets for some games on Friday. And maybe I'll get you guys involved. I don't think it's going to be the classic chicken nuggets eating, like get Greg to eat 100 chicken nuggets in an hour or something. It's nothing like that, but I've heard we have some pretty crazy bets up. Okay. I like these numbers. So again, when we look for, what's going to be a lot of these tickers that were break even, there's a lot of them. those are all just holding value, right? They're just holding a price point. Those are great opportunities. Let's flash in here. And again, our biases are towards those newer breakouts. Let's bring it back to the SPY here. Got a very nice move there. Our bias has not changed. Upside, upside, upside. And let's see. And also, let me do this real quick because I know some of you are probably wondering. I posted the GoPro and Netflix charts. Right? Let me show you these charts. Again, these are plans. These are plans, and especially the downside. The downside move is not trendy like the upside moves, right? So understand the difference between my bearish charts and bullish charts. The bullish charts, stocks what is it? 95% of the time are trending to the upside, right? So this move to the downside is always different. This is a plan for the idea of levels and everything. Keep these ideas in mind. This is why I don't have like a list for them. Just understand what I'm telling you with this sort of information here. A lot of this just has to do with, it's the same as a move to the upside, right? A breakout, but the schedule and the way you trade it is so much different. It's so much different. And so it's not like you can use those principles that we use because it is different principles. You can't say, well, I bought support and I'm going to trade it to resistance. No, it's probably going to turn whenever the hell it wants to on your options. Because again, if you're in puts or something, there's people that understand how you're going to trade the puts before you even know what you're going to do, right? And so these kind of things, and especially on the underlying, whether it's going to make the move or not, I'll go over shorting, but again, there's a reason why I don't, because the level of difficulty is different, and there's so many more tickers that you can trade to the upside that you don't need to go short Netflix. Just go buy something else to the upside, right? So keep that in mind. For the people that do like to short and everything else, then obviously those charts are for you. But for the layman, you know who you are. Shorting's not for you, okay? Shorting's not for you. You can go practice on paper trading. Since I am in a thorny mood and I'm talking a lot, I am going to make the comment that one of the funniest things that I find about trading is that the people that say, well, listen, I tried paper trading and, I didn't make money, but it's because I couldn't get into it. And, I tried it and I just couldn't really get into it. And so that's why I didn't make money paper trading. But you know what? Now that I've put my 100 grand into the market, I feel like I'll be able to actually do it. No, if you weren't successful paper trading, you're not going to be a successful trader, okay? I'm sorry, but that just means you suck, okay? You just suck. So I want to make sure that's clear because I know it's very easy for people to make excuses. That's the worst excuse. Now, I couldn't get into paper trading either, right? But that's a that doesn't mean that if I go paper trade, I'm going to all of a sudden be bad at trading. You don't all of a sudden lose your skill because you're not emotionally invested. That just means you think trading's emotional to begin with. If you say, well, I wasn't really emotionally invested because it wasn't my money, that makes you already turn this into an emotional game. And that the only reason you're doing it is to please your emotions. It's just price, and it's just trading in money. It has nothing to do with you. And so if that's your excuse for that, then, and no, it's nobody in here. I'm just making jokes, obviously, because it's funny. It's like, well, that means you're an emotional trader and you're going to lose all your money, so good luck. Now, those of you that skipped it and are doing fine, that's because you have the technical ability anyway, and you're following rules and you're doing what you're supposed to, but a lot of people don't have that. They're not here every day. They're not working at it, right? They think they can just go put the money in and get lucky, right? Maybe they do get lucky and then that luck makes them overextend and blow up their account very quickly, right? It's the consistency part that people have a hard time. They have a hard time, when we talk about this consistency, It's about being able to do this every single week, right? It's not just making that big gain in one day, right? When I'm going to do the paper trading with you guys here, I don't know when we're going to do it. Maybe you guys can tell me when you want to do it. We'll do it here together on the stream. I'm going to show you how, I trade. Just use the paper trading account. And yeah, I'm sure we could really get a little crazy and try to double the account in one day, right? But again, that's not how you should be trading, right? Just because it's possible doesn't mean it's something you can do every day, right? It's consistent. And so these kind of ideas are ridiculous. It's about being consistent over an entire year, right? All right, coming into 10 o'clock, this last 5-minute candle should be interesting. Coming into 10, so these next two candles, I do feel are going to be interesting and maybe dictate the rest of the day. I know it's a little much, but I would say that most movement for the day is going to be dictated over the next two 5-minute candles. Quote me, at me. And no, it's some of you go, well, don't you say that it's not about what the next 5-minute candles, it's about what's going to happen by the next week or the next month. Yes, I'm just talking about for this intraday. Just talking about intraday, okay? Not about, well, you know what, this next candle is going to decide everything I do over the next month. So if it's red, I'm selling everything for the next month. I'm shorting for the next month. No, you guys know I'm not talking about that. GFEN got rejected at resistance. It's just following a technical price movement. That's why we wait. We're patient, but we're aware. We're certainly aware. For those of you not aware, this chart, and it's making the same move as the market. This is just price following levels, right? But we're aware of what happens when this breaks. That's why we have this plan ready. This is just following exactly what it's been doing. That doesn't all of a sudden mean that this is just bogus. No, if it breaks here, it's going to make a significant move, which is why we're ready for it. We're ready for it. Doesn't mean it needs to do it right now. We're just watching. We're ready for it, for when it does happen. Because if you're not aware of everything that can happen, you're aware of all the possibilities, then you can't possibly do anything. Okay. Let's see what we get here. If this turns into sort of pullback and we're swinging back and forth all day, then that's what the day's going to be. And that's going to be a little bit of extra volatility, which means we are going to be juiced up. We are going to be juiced up over here. I would love, again, it's not emotional, but in terms of the positions we're trading, I would certainly love if we get this sort of swing back and forth kind of day. Sort of not even just like yesterday. This was flat yesterday. I want some of that, like 25 basis point moves back and forth on the market. That's money going in and out of different sectors, but no outflow. A lot of these positions that you see over here came from break even. 1%, 2%, 3%, 4, 5. MP, like those of you still missing these moves, right? Again, don't look at, oh, well, I lost money on my my BA stock that I have today, so I had a bad day. No, it's you missed the other moves that you could have made money on, right? This TSCO, again, funny ticker, but that has nothing to do with the fact that this is a great technical ticker and that it follows its levels. Take a look at this price movement up to the trend line, to the support. Let me turn this green because it looks weird. Then now it's entering this channel. This is the first time that we did this before, and then it came back through. What you're looking for is price to close within the channel to confirm it and also bounce on it, right? We talk about the bounce. You want price to bounce on the support to control it. This is a great trade in terms of being able to trade this within the channel. It's so much easier to trade it within here, and it's a whole new chart in here. Well, it's just a continuation of this trend. This is a great possible trade. Again, don't tell me about fundamentals that people are not buying tractors. I do not care. To me, this is TSCO. Has nothing to do with tractors. Don't care. Literally don't care. So again, all about technicals and price. Are you telling me that every single time price pulled back and then went up, there's some fundamental idea behind this? There was some news event that caused every single one of these price movements? No. To me, this is price purely trading on technicals. Trending, consolidating, breaking out. Breakout, consolidate, breakout, consolidate, breakout. What's it going to do here, though? This is a new, if it bounces here, then it just continues the trend, right? Keep that in mind. I like this. I like that chart a lot. And again, these are the ones you look for. These are the ones that hurt when you see it because it's just so brutally obvious. It's like, damn, man. How did I miss that one? Everyone's favorite memes tickers. Something like this here. Coming into resistance. You know what to watch for. You know when you make a decision. MRK coming out of here. These kind of... Listen, this kind of one here, this is one of those charts that it's a little more difficult because it's been trading on a level. And I talked about this, I think, when I opened up the chart to show you guys. This has just been trading on support here. You don't know if you need to be buying here or not yet. It's hard to tell, right? So that's where you're allowing yourself to miss a percent or so to confirm that it's making the move because you don't care about the 1% here, right? You don't care about the 1% there. You care about this over 6% to the next level that you can make, right? What I will say is definitely in terms of the market, cooled the jets, consolidation. Let's see, what do we got in the bullshit channel? TSCO. Okay, I don't care. In terms of the market, unless we see a big breakout candle, definitely consolidating here. Consolidating within our levels, though, on our understanding. In terms of what this turns into for consolidation, we need more information. Certainly need more information. Right now, we're just trending. It feels sort of reminiscent of this idea in here, right? This idea in here, we get into this situation where sometimes there's a price event, which is similar to this here. I talked about this is the Georgia runoff, where then we went very bid. And then you consolidate the move in this sort of no trend other than a support trend fashion. So this is very similar to this over here. Not to use like, oh, well, it happened before, it's going to happen again. But keep this idea in mind of what's possible, right? It's very possible that you turn into this sort of pivot move here. So keep that in mind, especially since we're bouncing on a support here. So keep this idea in mind of the early January, okay? It's important to see this, especially for the IWM chart in terms of the Russell 2000. This move here, keep this in mind. Oh, excuse me, over here. Keep this idea in mind, right? It's important to see that this move, now you've got a doji here. This certainly already leads to an upside idea, but it is in a kind of a shady spot when we think about it, right? You do have, you have so many damn trend lines that, see all these wicks in here. So look at all the wicks in here. You certainly have a trend line, but again, you could do this every single day. We understand that this whole thing is a level of supply, right? But, again, there is, look at the amount of wicks, right? When we talk about what is a level, it's price converging, which is price, it'll wick into the level, it'll be bought there or sold there. It got sold at this level, it got bought at this level, right? It got bought at this level. All of this traded through it, got sold at the level, right? All this converging, that's a trend line. That's I already saw 20 wicks. So you're stuck between them, and again, it's like, well, damn, dude, that means like everything is always on a trend line. No, it's not. It's certainly not. So I know we have a lot of trend lines in here. We can remove this one. This was a local trend. Keep these ideas in mind. So again, this leads very much into what we just saw over there of sort of this upside potential move. And again, this is where people get, this is not where you can now go all in here and say it's for sure going to happen here, like you could over here or over here, right? One of these candles or over here going all in. You have to be a little bit more careful, but you're still not changing your bias, right, until something happens. So I want to keep that in mind. I think it's important to see that. Certainly in a good spot. Yep, MP continues. MP definitely continues. In terms of this, let's get prepared for the transition up here. This comes in at 49. So for MP, the trend line comes in at 49. Now, it's about 12% away. In terms of that transition, it's a difficult question to propose. How exactly do you change up what you're in here? I mean, this one I wouldn't react too quickly, right? Would not react too quickly. What I mean by that is give it a chance. Give it a chance when it gets into that resistance. Maybe it pulls back a percent. Give it a moment to decide, because a lot of times something like this, if you look at this trend here, and the reason why I'm saying that is just take a look at how strong this trend is. Yeah, it's probably going to get rejected, but it's more than likely going to just trade on the trend line. For this chart, it's a new chart, so all it really knows is a supply here. That's all it really knows. So I'm acting like it's a human or something, but just keep that in mind. Again, the Chinese ticker's doing very well. I'm a big fan of those still in terms of having a bias. They're very good trades. There's a lot of liquidity there. This just tightening down in here. I like the day so far in terms of our positions. It doesn't make us change our decisions or anything, which is great. It gives us free reign to do what we want to do here. Oh, and those of you wondering, so our Unrefusables fund, it does take apparently a day for funds to transfer to a new account. So that's what we're waiting for. That's why I didn't get it last night. I thought I could quite literally just create a new sort of added on account. It won't let me do that. It's like transferring funds a whole new time, right? And so I was like, oh, okay. So tomorrow, that will be up and running. So you will get the channel and the vote today. So think about maybe what you want for what I'm going to do is you'll see it. I'm going to have the channel, and it'll just be a new, forum to talk, and you propose your ideas, and then you get one idea, you type it into the chat, and then I create the poll with each one of those ideas, and then everyone votes on it. Whichever one has the most votes, that's it. Gets the vote, and depending on executing trades, I think for now until I figure out how to API into you guys voting on exactly when to buy, I will just do best case scenario for myself to trade it. So if it's like, oh, we're all going to buy SPY February 400 calls, then I'll figure out the best way to trade it during the moment. Maybe we'll get a little bit more specific with when you propose the idea, it needs to be like, you need to buy it at open or whatever it is. We'll figure it out. And that's where the API will be a little bit better, because it can just be live, and the people who want to do it can do it, and other people can just watch. They don't need to be a part of it. All right, that's a nice little bump there. No, not drugs. The market. I do want to just laugh at some of you for real quick here on the EH chart. Okay. I'm going to laugh real quick. It's up 58% right now. I know it's so hard to look at it on the intraday chart, but here's what it looks like here. Now, it's coming into this resistance here. This is actually really funny that, you know what this tells us? It's all algos. It's all algos. There may not even be any people trading it. There may not be any people trading it at all. is actually really funny. We're going to keep these trend lines in mind because the fact that it's trading perfectly on this supply for something that's this, I would say that you have to log this chart. So naturally, I would tell you that you have to log this chart, right? So that this price action actually works, right? And you could put this trend line in here and it might still work. It might still work. Doesn't really, but it's very close. So what I would say is usually you'd have to log it like this, right? The fact that it's trading on a linear scale tells me it's 100% just algos dicking around in here. This is way too perfect of a bounce down here, and then a way too perfect of a rejection in here. And the fact that we've traded this so consistently, right? Consolidate, breakout, consolidate, breakout. I talked about it so many times, right? Consolidate, breakout, consolidate, breakout, breakout, consolidate, breakout. And now this breakdown leading into this, I mean, this is just way too, it's looks like a computer, right? It literally looks like a computer. So, oh, this is really funny. Whoa, man, no, it's all fundamental, dude. It's all about the value of the company. All about the news. Yeah, the news started it, but look at this. Price coming through the two converging trend lines. How many times do we talk about price wants to go through the two converging levels of supply? How many times do we talk about bouncing on support, rejection, resistance? Keep this idea in mind because this, I mean, already again, 90% of all price volume, 90% of all volume is just algos, right? Only 10% is actual people placing the trade. Now that 90% includes those you actively trading and then using like the IB algorithm. So that does put you into the algo thing when it's placing the price, but still significant amount. And it also includes when your order, first of all, gets sent to like Citadel or something, right? High frequency traders, those are considered that. Funny chart though, really funny, really funny. And a good lesson, I think, probably a good lesson. JD here. This is a very, very difficult trade. I would say this is a good example from what we've been talking about of a ticker converging to its sector. In terms of Chinese tickers, the tech companies, we basically call them a sector because they all trade on the exchange together, and they're mostly just tech companies. And so we talk about them all being a sector. But the JD chart was dog shit over here. It's like Facebook of Chinese tech, right? It was dog shit over here. And over here, we talked about it, trying to trade it over here because it got a little bit easier. But this, again, was madness. It's so difficult to trade. So this move is really just converging to that sector. You know, you look at like a Billy chart and how easy the trend is to see, right? This is tightening. You know it's going to make a move. Which way is it going to go? Well, it's going to continue to the upside, this kind of thing. It's very difficult to see that JD chart. I think it's, again, a good example of a sectors dictating price movement, not the chart itself. Let me look at some tickers that got mentioned here. Mentioned DVN. We talked about the DVN entry over here. Also talked about the support pullback. This move going up to 22.5. I mean, if you miss it, this is certainly one of those short-term memory or you're price watching. It certainly you can. If you didn't enter at a good time, it's certainly a price watching chart. If you didn't enter on the breakout at the support buy here, 100% you're price watching. If you didn't enter over here, you were price watching. This is certainly a price watching chart. It's a good point. But again, these energy companies that we've been trading are very straightforward trend charts. So I wouldn't get caught up too much on buying too late on a chart like this. And I talked about on the energy side, this is tied more into the macros, right? The spot crude and shit like that. A lot of the times you can get away with murder on these charts. These are very marginal moves. I mean, this chart may not be as good of an example, but it's very consistent in terms of its sizing. Like those charts that do 1-2% moves, this one's a little bit larger, but again, it's that trending idea. But you can certainly see how that might get affected. CCL returned to its to its halfway point on the candle, which again, this historical idea of returning after a buy event or a sell event to halfway into the candle is just how it's going to work almost every time. It returns to it and continues, right? You don't get shaken out of that position as stated earlier, right? Keep that in mind. GLW is still at the resistance. So again, this chart from last night, you're just waiting. It's a yes or no trade. Came right up, wicked right to the level. You're just waiting, right? But again, these new charts, very significant. MRK mentioned earlier, you waited. Now you let me know. What do you guys think? What do you think? You waited? What do you think? See how this candle came into here? That's when I was talking about it. It was just kind of, okay, what is this? You figure it out over there. I think you guys will do okay. TTCF being mentioned by Brian and JJR. Of course, we just brought this up again. This is a good example of a chart that you gotta wait. You gotta wait for the break because you're willing to miss a point or two for the price move that's going to come thereafter. This move that happened through here, right, is very, very difficult to trade anything in here. This type of thing in here, you're going to get, there's times when you're just going to get caught, right? So you enter on the break here and then you trade up to resistance. That's, of course, a rejection, so you're taking profit. And then over here, you never had a chance. You can somehow create some ideas over here, but this broke down way too far, so you're no longer buying at that support. This pullback wasn't on support. These moves, this is all supply. You can't do shit here. It looks like fun. You need to trade it through this breakout here, or you need to trade it on a clear support bounce where it's actually going bid to the upside, right? That's usually on 2 daily candles. Red candle pullback into the level, buy it from the open, right? Chewy, again, this kind of chart here, again, is going to hurt. It's going to throw people off. And again, variance. First of all, the candle yesterday was basically a historical candle. The candle today, we talk about that second daily candle. If it starts selling from the open, you're, of course, taking profit on that second daily candle. Now, you've got this, Brian mentions the trend line here. You do have this trend line that it's reacting to. It's going to be hard to see it on the intraday here. But it's certainly in there. Now, what's more than likely, it continues its move that it's on, which is going to come down into here, right? Maybe you get the trend line. This chart, be patient on. If you got this trade here, right? Let's say you entered it late. Well, that's because you entered it late, right? And you didn't have anything here that told you to buy it on this day. Yesterday. It doesn't make any sense. Anywhere in here, you're certainly up. In terms of where you enter this again, you have to be patient now. You have to be patient on a chart like this. Same idea, right? The same idea has played out. You just got to give it time, right? You got to give it time. It will be clear, right? This breakout here was clear. We traded it before this, right? I just charted to give us an idea. We traded it before that and captured this move. That candle will happen again. That will happen again, and you'll be able to capture it. But you need to figure out how you can buy on this support in a secure sort of fashion, whether it's here because it's tightening. It's a pretty nice look right there. Pretty good look there. This volatility, the tightening on the level. But you want to see a bounce. You want to see a full bid sort of spree, which isn't going to come at 10:20. It should have came at open here. This didn't whip enough, right? It's tightening. I would say here you have to be patient. You can't go get that right now. If it goes up to the close yesterday, well then let it. It's 2.5%. FLNT pennant. Let's take a look. It's certainly tightening. I can't remember what day we mentioned it. I think it was because of the reversal. We talked about taking profit. It's certainly in that idea. It's not so much of a rally in the same sense. You can broaden it a little bit and get there. You can certainly fuck with the ratio a little bit. It's certainly tightening, though. It's certainly tightening. In terms of whether it's actually breaking, you need to actually break out, right? It needs to actually break out first. But again, this is a good example of if it was a pennant, then it should have broken out over here not at the apex over here. It's already sort of, it's tightening and it's going to make a move, but it's not the same thing as when we talk about sort of a chart that breaks out earlier and it's a very clear break. This over here is just popping out. Can't get any. It could probably get one more candle tighter, but then it has to make a move one way or the other, right? Those charts that just pop out the side just because of dates. Those are still doable, but keep that in mind. It's not really a pennant. It's just a continuation from this here, right? It's just continuing its move. It consolidated a little, but not really a classical pattern or anything like that. It's not, like, here's a good example. I'm not going to go post this chart as a pennant, right? If it broke out here today, if it put 10% on here today, I would just say it's a continuation of this, right? Good candle here. So again, good candle here. Hold on, let me do this. Okay. So again, I mean, there's certainly been trades out there. That KC chart, let's take a look. KC over here, certainly, you know, we just talked about a pennant. Take a look at that move. That starts to break. See ya. It's going to continue this trend. This chart, when we talked about it, this is just oof. The breakouts are just so clear. If it's going to break out, it will be clear. And again, if that breaks out of these trend lines, then that would be a good example of a pennant right here, right? This kind of move. See how it's breaking? If it broke out here, it's breaking out so much earlier than its apex. Apex being the two converging trend lines, right? It'd be breaking out halfway through, which is the sooner it breaks out, the bigger of a move it's going to make, whether it's up or down, right? If it breaks out, big move to the upside, breaks down, big move to the downside. The closer it gets over here, the less of a move it will make. And that's something to always keep in mind when you see tightening. That's why we talk about when I'm watching price, even on intraday, if I see the tightening happening, I say, oh, it's going to make a move here. It's forced to, but the sooner it makes a move, the bigger of a move it will make, right? When it starts to trade a little bit flatter, I go, oh, okay, I don't really care anymore. Same thing with, like, if price is on a support level. If prices just continue to trade on support intraday, well, then it didn't bounce and it's not getting bid, right? It's going to happen quickly. On the sell side, let's see. What are the possibilities on this Chig chart? If it comes into this trend line, it's very good support buy for tomorrow, I think. I don't think this refutes. Again, if price is above a pattern, above the top trend line, whether it's a wedge or whatever it is, then it's still active. The idea is active. Could get very interesting in here. Now, again, this wasn't like so much a classic pattern or anything like that, but I would say that if it bounces near that trend line, tomorrow would be a good entry in terms of volatility, right? Like this move, could be some volatility on that chart. QFIN up here, this is certainly a bearish candle, right? Engulfing line, outside bar from this trend. Certainly a take profit. And then the trend line here is a very interesting spot, whether you're bouncing there or breaking down that trend line. This was just an awesome trade. Still, again, my favorite trade from last week. Again, this is clear. You don't need much more clarity. CNX is a good one too. Good call. CNX. We just talked about it. Just talked about it. And again, this chart, for those of you who don't remember, we traded a lot. We traded a lot over here, coming out of the bottom, and then this move especially in here. The trend is just, it's very clear when it makes a trend. It'll be very clear. There's no mismanaging this position. Again, healthcare and bios, very good plays. Still doing very well today. VIR now at 13%. FLDM, excuse me, that FLDM chart is a very wild chart. It's a difficult one, but these moves from through all this, I mean, again, this kind of, now it's back into, okay, well, now I've got possibilities up here, right? Now you get possibilities from here up into here. I mean, wild. This again, this is where whoever's in here, I mean, you're probably going to be better. Even everyone in this group is probably better than 90% of the people trading this in here, right? I mean, it's just nightmare fuel. The volatility in these kind of charts you can certainly take advantage of. Small sizing, but certainly could take advantage. This EXCL chart, we're waiting for this trend line really. But this would certainly be very strong. This move in here, that would certainly be very strong. Classic. Keeping that in mind, again, these moves are, I mean, it's not the best continuation, so maybe it's more of a, it might be something a little different, but just to show you these two trend lines in here, I think it's pretty clear. But we wait for breaks. We wait for the breaks. Very strong move from the death boat today. If we take a look at like win or something, right? Like, it's break even. Don't cry about your position from yesterday. Oh man, like, I'm break even. My option's like 5% down today. Stop. No one feels bad for you. Okay, I'm gonna keep it over here, get some trades out of the way. Again, flat daylight today is going to lead into some big price moves the end of the week. So when we ask the question, what's going to happen going into the weekend? Probably some pretty damn big price moves. Let's be honest. We've been doing some consolidating, right? We're pushing into all-time highs. Even on the days that we were just sort of flat, we would open up into all-time high. We're doing a little bit of consolidating. It's going to lead into a move, and it's going to probably be a big one. We want to get involved. Both sides, both ways. We're going to react to that. So again, we're trading, let me again form this as, we're trading our positions that are breaking out towards the upside, right? The market, if the market's trading to the upside, then we're increasing our positions and our charts, right? Maybe getting involved in the market average a little bit sometimes. If the market's going to the downside and it's a breakdown, right? It consolidated and then broke down, then we're trading that breakdown. We're shorting. Those trend lines break, we will be shorting to the next level, right? So breakout, breakdown. I don't see it happening today. I would say tomorrow. Friday, right? Thursday, Friday. Pushing to the end of the week, and then Friday being the decision maker of, okay, well, we're going risk on over the weekend. Or, oh, you know what? Might be a little overvalued over here, as they say. Overbought, they said. I think you could definitely get some more points on. So again, a day like today, what happens on a day like today where nothing's really happening so far? People start to jump, like it gets crowded in a ticker. So something like CCL that has like demand right now and people see it, everyone could get crowded over there, right? That kind of idea happens on a day like today, which is why we talk about we love when the market's just sort of doing this because demand doesn't want to come over to the average. Everyone's like, well, this is just trading flat today. Let me go find something to trade. So everybody jumps into a certain ticker or certain sector. Like I've been saying since last week, travel is really that sector this week, right? So Ecto mentions AAL, right? Airlines still. Those on a day like today are people are going, what should I trade? That's what they're going to want to get involved in, which is why we're already in position to capture any demand that comes through, expecting it, right? We're expecting it. I mean, most of it, a lot has already come, but there's plenty more there, right? Plenty more there. Save, right? Just imagine thinking that, I'm done with this chart. I made my money over here. I'm done with it. Took my profit. Since I sold it here and took profit on my move, I can't possibly re-enter this position. There's just no possible way. Yep, LUV. Again, airlines. I mean, you can go, I wish we had a clip function. You can go clip the move where I drew this on the chart, like 20 charts, right? Talked about that. Ooh, that's our transition point there, boys. Over the weekend. Put the position on over the weekend, guys. And then everyone that did are the ones making fun of everyone else, right? You have the right to. The doubters, leave them behind. Leave the doubters behind. Again, this airline move is our move. It's ours. We claimed it. You can only adopt a child once. I guess you could have some really fucked up situations where someone gets adopted and then gets de-adopted, if that's a word, and then re-adopted. That's insane, but that doesn't happen very often, I imagine. So that we adopted the travel airlines. They want to tell us that COVID is grounding planes, no one's flying, and that has everything to do with stocks, obviously, right? The numbers, of course. What if I told you a little story? A little story about price movement. WFC, oh God. What? Again, we've been hot on banks. You guys want a bank that's got a long way to go? Just go take a look at WFC. This is the best example. I should have thought about this example before. This is the best example of a ticker converging to its sector, right? The best example of a stock converging to its sector. Here's the XLF chart, the bank average. Look at the bank average to its February high. This is the February high on all banks together, even WFC. This is the average. Here's February of 2020. Here's right now, well above, right? Here's WFC. Still, even from this day so far, 34% behind. Remember these ideas. I mean, and again, this is a good example of why you don't trade this ticker. Imagine being like, well, I'm going to trade some banks. Let me go trade Wells Fargo. Be like, okay, good luck. Good luck down there. Well, good luck. Have a good one. You're like 100% behind. 100% behind. Yep, Zoom made the trend line. So again, we talked about it yesterday. Just be patient and take the support bounce. Right? So there's Brian's entry right there. Straightforward. If it breaks down, what do you do? Well, you're going to take profit and look for your next entry. Buy more. Just buy all the way down. I like the stock. Just buy it on the way down. Twitter. What are you guys doing up here? What are you guys doing if you bought in down here? What are you doing? Oof. 35% move. Yikes. That 3% is probably hurting right now. Yikes. Pull back into support. Next move, right? Boom. 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 MRVL trend line. Semiconductors are certainly all on trend lines. I mean, this chart, we've talked about the difference. What's the best way to talk about this one? This is more of the, do I want to lump it with AMD? The price movement of this downside trend movement is different, but it's the local trending down. Like AMD has this trend pattern this way, right? If we go over there real quick, has this move, right? It keeps doing that trend down, and it did the same thing with MRVL, but we talked about how MRVL was actually like sector tracking. It wanted to converge as well, and it has been on a trend, but it broke the trend. So now it's nowhere near as bullish as this idea was. Now that it broke down and it gapped between the converging trend lines and it broke the support. So I would say it's going to continue this, which is, again, when we drew this and then it broke out, it did feel like this was going to continue here, but there you go. There's your confirmation of nope, see ya. Now, can price just come over here and break through here? Sure. But this tells you that it's not a trade that you can take, right? That it doesn't feel good over here. You mean, even if you were in this trade too, like how do you don't necessarily sell yesterday. You had to sell immediately from open here. Hard to understand because of how bad the levels are. So again, opportunity cost, this is one you remove. You remove until it becomes clear, like a trend in here, right? That didn't happen, so you remove it. And again, I mean, this sector is selling here today, so it's reacting. But this chart, if it turns, we jump right back in, right? There's like obvious difference, right? This pullback, you jump right back in on the next time it upturns. That other chart, no way, right? Just like AMD. Now, like NVIDIA is another good example of now that you're up here in the supply, it makes it so much easier to get back into that trade. So you're willing to sort of make multiple different trades and understand your transition points, and definitely difficult. Tesla coming into the trend line here. So again, this kind of move, listen, I try to be not a complete asshole all the time, but again, from this talking here, if you're holding, and again, I'm not trying to be a dick, but if you're holding through this, you know what you're getting into. There has been no such thing as being surprised. There is no surprise, okay? So if you're holding anything in here, it's because you're willing for price to pull back for the future upside. Now, as I said before, in terms of our trading and the way we trade, we sell and we'll rebuy at a lower point because that's what makes sense. And if we have the time to do that, that's what we do. So let's say you're in this position here, for whatever reason, you sell it on the breakdown and you look to rebuy at a lower point. If you really want to get involved with it and you still find it bullish, then you rebuy at a lower point, because taking that hit, you're not only losing the value, you're losing the time, the opportunity cost to put that money somewhere else for no reason, when no one here has $1 billion position that it's going to take a few days to get back into. You could sell everything immediately and buy at any other point, whether it's 5 seconds later or a week later, right? So again, I will not be comforting anyone's excuses for bag holding. Just bad trading. That's all it is. Bad trading. You're not even trading. You're like a long-term investor. Which is fine if that's what you are, but don't talk about trading if that's what you're doing. That's for sure. Because that's not trading. Uber is a fun one. Did see that popping up. Uber's a fun one. This whip idea from the open. Again, this is turning into, certainly you're getting some like Guy Fieri vibes over here, right? A little bit of Flavor Town. The breakout here was great. This consolidation, you've got flag ideas, you've got wedge ideas, you've got a support coming up. You've got I mean, you even have some other ideas of levels coming through here, maybe some local trend ideas. There's a lot to like on this chart. Um, I do like this move. Whether, again, in terms of timing, you can mess up the timing a little bit on this chart. It's completely okay to, you don't need to be there today. You don't need to be there tomorrow. Maybe it's a fun weekend position. And what I mean by fun is like, fun is in making money for those of you that like to make money, right? So certainly keep watching that chart. Keep it in mind. Ford, right? We're still watching. We like the stock. That meme, we like the stock. It's certainly prepped. Are we going to sit in it right now? No. I'll use the money for something else. Whether it's to, you know, I don't know, what do people buy? Whatever you people buy. Or if I want to trade with it. I'll use the money for something else right now. When the time comes, I'll enter it. Why do I need to sit in something, right? Let's say you have something to do at 5 o'clock today, right? So you get something to do at 5 p.m. Or let's say around dinner time because we're all on different schedules. Or let's just say in like 5 hours, 6 hours, you have something to do. Are you going to just sit there on a couch and do nothing for 6 hours until that thing that you're supposed to do, you're going to do it? You're just going to, Macto says some days, okay, but hopefully not every day. I got to go to dinner in 6 hours with my wife, so I'm going to sit on the couch and look at the wall for the next 6 hours until I go to dinner with her. That's how I live my life. If you do that with your trading, your trading is going to be as depressing as that situation is, where you're just sitting there staring at the wall for 6 hours, jerking off, doing nothing, right? Don't do that trading. You have to be active in making decisions. Do something. Just do something, anything, please. Or just don't be in a position, right? Just stay out of it. Stay on the sidelines then. It's like saying that you're going to play sports. Let's say you're playing football, right? I mean like football, right? You're playing soccer with the boys, playing whatever it is, your sport. Basketball, let's say basketball, a little more international too. You're playing basketball. Imagine like you tell your buddies you want to play a basketball game, pickup game, and then you get there and you just stand there and do nothing, and you say, I'll get the next one. I don't really, no, I'm just going to stay in right here. You guys have fun. You guys have fun without me. Oh, good one, Greg. Nice shot. Wish I could do that. If there was only something I could somehow move my body. Dumb shit like that is like the strangest excuse for doing dumb things trading. Like, oh, there's not anything I could possibly do. Like when you actually talk about it, trust me, when you say it to people, they think it sounds ridiculous too. You just don't understand that it sounds ridiculous to yourself. That's why when you type into chat like, oh, there was nothing I could do. Like, I'm just in a losing position here. Wish there was something. That's literally what you sound like, are these dumb analogies. My house was on fire. Really wish I could get out of the house. I laid in bed and I accepted that it was over. And by the way, this was just like a little microwave fire or something that burned for 10 hours. You couldn't possibly stop it. Oh, the water was boiling over. Couldn't possibly get out of the couch to stop it. Stop it. Don't make dumb excuses. You ever just, you're sitting here trading and you go, wow, I really got to go to the bathroom. But you know what? I'm going to stay right here in position and piss myself. Nope, I'm not getting out of position. I'm going to pee my pants. That's the new meme, boys. Next time I hear bag holding, I'm going to say, yep, you know what? I have to go to the bathroom really bad, but I'm going to stay in position. Now that's a red day. Hey, Logan, why do you smell like piss? Well, I couldn't possibly get up to go to the bathroom. So I peed my pants. Sorry, babe. It just sounds stupid. It's just stupid. There's literally no excuse. You're a grown ass man. All right, not much market movement. In terms of positions for lunch, I would be, again, like I mentioned with the CCL thing, like this move, like we mention it and then it starts to happen, right? That's because, again, this is just like that feeling where the market's not doing anything. So as a trader, you want to go find something to do. And so then you start to buy things like this. So for all of lunch here today, and again, we started lunch pretty early here today, I would say, in terms of the amount of activity, because again, everyone knew we were kind of trading flat here since the open, where we didn't continue that move like 10 o'clock. These are the kind of positions, again, where that demand's going to come in. So you want to be capturing this move when it starts. There's going to be a lot of examples. JR mentioned EQT coming into the support here. It's a very nice trade if that's making its move. Let me show you on the daily. This spread here is wild today. It's a lot of volatility. If you get a confirmation there, that's a great trade there. But so again, if on a day like today, you're going to have a lot of chances, right? So when we come into close, and I'm going to still be here, but when we come into close, after close, we're going to look at some positions, and you know that there's going to be some positions that you missed, right? There's just going to be some things that took off during lunch and you just missed it. So you got to keep your eyes open today. Because again, it could be a trade that you could make 100% on today, and that might be a significant amount of money, right? That it could take a long time to make that. AAL, right? Like if you missed the airline move or any of the travel move from the weekend, like again, you are like I know we use the fundamental idea for a lot of different things. You are fundamentally just being lazy and not paying attention and working hard enough. Or you're just not listening, paying attention somehow. This kind of move, you're just straight up ignoring everything, right? If you miss it, and again, I started it yesterday, and since I'm thorning again today, I want you to continue. Like I'm gonna continue saying it. If you are missing the move, you are doing something wrong. If you're missing it, the excuse is that there's something there and you have to fix it. There's something broken in your trading if you're missing any of these moves. Okay, you're actually just fundamentally doing something wrong. Like, and there's a significant weakness that you have to fix. If you want to make money trading, you need to remove whatever that is, right? There's something there, because there is no excuse on a lot of these moves, okay? And again, you have to be very realistic with yourself and get pissed off sometimes that, okay, I need to wake the F up, right? You're just not doing something. Like if you want to be serious, then you need to be serious, right? You want to make serious money, then be serious with yourself that you suck at trading. You need to do something. Stop being lazy. Work harder, right? Oh, I got a day job. My wife is nagging me. Tell her, shut up. I'm trying to trade, okay? I don't care what it is, but I do want people to get maybe a little bit angrier when this candle comes in and you just missed it. We've looked at this chart 100 times. We just looked at the save chart 20 minutes ago. Looked at the save chart 20 minutes ago. These moves are preempted. We traded CCL from Friday, and you could have traded it even yesterday, right? We traded it from over here. You're missing this move, then you're missing the most basic of trades. It's not FOMO. It's not FOMO, because that's a different idea. You're price watching, because you're here every day. And you need to get mad and realize that you're doing something wrong. Otherwise, you're not going to get better. This was a 100% trade if you bought it at open. It's a significantly higher trade if you bought it on Friday. That's a life-changing amount of money for most of you. BA? What's happening on BA? Are we gonna? This is also tied into that DFEN idea, right? And so I know I've shitted on BA for so long, but if there is a move here, I will take a trade like that because we know all the retail traders will jump on any idea, but we wait for the breakout. It's similar to down here where it became tradable, and then it went back into its normal BA phase of this terrible, terrible price action. So Brian does mention it. It may not be for another week or two, may not be for a week or two, but I will be aware of this because of the not only the retail presence that when a breakout occurs, they don't even change up their style. They just keep buying it the same way. If there is a break here, and what's the break? Well, you have this local resistance here. You've already broken a trend line. A lot of this comes down to the actual price move itself. So, for instance, when you think of, let me just draw the trend lines in here. When you think of some of these moves, right? This candle didn't break out until much later. And then you look at this move in here, it's kind of garbage, right? It's quite terrible, this price move. And you don't have very good clear. And so there's some sort of trend line in here. I'm going to try to, let's see. This is your trend line right here, okay? Let me do this real quick because I think this is important. So, again, something retail's not doing is understanding where the trend is. So you get this break here. That's quite clear, right? And so you get some sort of continuation triangle going on here, but you continue to break down. So we're going to kind of ignore this a little bit. You've got this like trend line in here, right? If you break that trend line, I would say you're good to go. You're good to go and take a stab at that with no downside. There is zero risk taking that position. You're almost getting paid to enter that position. Like, quite honestly, you're getting, what's funny? The people that bag hold this are getting paid in terms of their routing for providing liquidity, right? They're literally providing liquidity and probably getting rebates on commissions for being in that position. It's almost like I get a dividend, right? Quite literally. Like, the smart routing on IB, sometimes I'll get commission rebates because I'm providing liquidity, that kind of idea. That's basically being a perma BA trader, is getting permanent commissions rebated. So you're like, well, perfect, I'll just keep trading it. But this would be the trend line. These wicks in here seem pretty strong. I bet if we extend this, we're going to get some, who wants to bet that if I extend this line that we get some wick touches? It's pretty close. It's not exact. Hold on. Let me type it. See, it is there. Let me refashion it. Boom. Boom. There you go. It's still, there it is. Look at those. That's also a clear break from in here. Now, there also, I think there was, it's not going to price adjust it, but looks clear. We'll use that trend line, so going forward, keep that in mind. It's been so bearish for so long. But it's a part of the DFEN idea, that sector-wide move that is expected. It's speculating right now, right? There's a lot of speculation around it. Let's see, what's a good thing to do with some... I do have a little bit of risk I can put on. Let's see. Somebody give me an idea for risk and I'll put it on. I'm kind of, when you think about your ratio in terms of your portfolio, there's a certain amount of risk you can put on in a dollar value. I have a little bit of risk I can put on. This move is going, is it more tech oriented? Maybe. Okay, here's what we're going to do. Somebody give me a mega cap. Whoever says the first mega cap, we're going to go buy calls on it very short term. Facebook, you fucker. Okay. Okay, 3 more people said Amazon. I'm already in the Amazon position, but I'll put Amazon weeklies on. You got it. Amazon weeklies. Amazon weeklies. You sold yours today? Ouch. That's a tough one. I'm guessing you entered in the same spot over here, right? Those of you that entered over here, maybe we can go over this later. Those of you that entered on Friday with me, you definitely should not have sold yesterday. There's almost you had to have convinced yourself, somehow you convinced yourself to get out of that position. I would have re-entered it anyway. Maybe we can go over this later. I'll use this as an example because I knew that was going to happen, which is why I mentioned it yesterday. You can go back to the recording, anyone that wasn't here, and hear me talk about entering this on Friday and not to get shaken out of it because, the usual. This is certainly a good trade. So let's see. We will put the old weeklier on. By the way, what was that spread that we just saw over here? Let me put on the 15. Look at that spread on that candle. Look at that spread. No, that's gonna go to, I would say today you're gonna get about 1.5 to 2%, 33.60 or something like that. Maybe 33.60 is a bit much. I mean, that feels like it's, it would be like this level in here, right? This one. What is that? 33.50. Like 33.50 is probably, I'd say about 33.50 is probably more likely. And if it does get there, then I would say that it's going to put points on very quickly. Again, liquidity. So I'm going to put weeklies on. I have weeklies on, but again, I have a long position here. That's completely aside from risk. There is no risk in a long position, so I put risk on. Those of you that are still wondering what the differences are between those. Risk on is short-term trades that have significant risks involved if the price doesn't keep going up. That Amazon long position doesn't have risk in the short term, right? Typing on this other keyboard, I don't know if you can hear it. It's a fun one. This is a good one. Good call out. We'll ignore Ecto's Facebook. I know, I'm a fucking picky chooser, dude. I'm not gonna. This is why we're having voting for the fund. We're having voting for the fund for a reason. Like community voting. I'll remember that. He's gonna start proposing bad ideas. Give me 1 second, guys. Let's see. We got 11 o'clock. 11 o'clock, we already know we're in lunch mode. Let me give you guys some information here. Give you SPR if we can get that one, of course. Okay. Oh shit, I don't know. Whatever. What is going on this over here? What am I looking at? Hold on. Okay. Some weird stuff going on in the options. Okay. Let's open up some charts. What you're looking at, SPR. Over here, again, this trade, I talked about it last week, that once this resistance break does happen, you're going to put some points on, right? You guys remember over here, we had this price movement. We talked about taking the trade over here from the trend line, but this next move is the move, right? Very similar to over here. That move that we captured over here, again, missing that move is reasonable, but this next one is pretty straightforward understanding. Traded up to 45 or something. JR mentions TME. TME certainly pulled back into the trend, but again, look at the trend that it's on. It's certainly bouncing, and I mean that's a tough day, but it's adding volatility as well. So calls are still break even, I would imagine here in most circumstances, depending on entry. I would still say it's heading to the upside. CBAT continuing to move, right? It's trending. It's sitting on this support. It's sitting on the support. It didn't break away so much. It did pull back in on a longer term scale, like we were talking about over here, that these 5 minutes wouldn't be enough. But then it didn't actually clear. So it should be interesting to see what happens in like the deeper levels of lunch, how much supply gets removed, and it's all demand. We'll see what that looks like. It is becoming a little bit more difficult here on the day so far. If you weren't already in position and entered over here, now you're just holding it until you would not sell it even if your contract. This is a good example of where you need to change it up a little bit. Let's say you entered over here on this break. You're not exiting it until it broke down from here, until it actually broke your actual entry price, right? So, because again, your upside is so much, it has such a higher probability to the upside. JJR is being a greasy mobile trader today. No internet. That sucks. Sounds like everyone in Texas. In the States. Yikes. Let's see. BPMC saving. Getting healthcare. I'm not saying that someone should have entered here today, but we do have a long position in the chat of unsellable shares that is getting a boost today. That's good. It's certainly just sitting. Yeah, there you go. Okay, he doesn't care. It's certainly just holding a level. Who cares? It's just swinging back and forth. Could do this for months. Who knows? At this point, certainly a nice move on the day. Okay, let's see. Who's going to be up next? So we get the little bit of Amazon risk. Obviously, that does fill up a lot of the cash amount that I was looking to put risk on. I do have a little bit more. That RVP move. Let's see. This tallow chart pulling back into support, bouncing around. Should be interesting to see what happens. Net is a possibility. I was thinking about this yesterday. This is possible. It's really difficult coming from this open here. I was gonna pull the trigger, didn't pull the trigger, and now I don't know if it's possible. Maybe on, okay, here's what I'm gonna tell you what I'm gonna do on this position here. I'm going to put in, so those of you on AB, and again, I'm gonna have the video up today, I'm gonna have the video up today on order entry and hotkeys and stuff. What I'm gonna do here is I'm gonna put in a iBalgo order, and I'm gonna have it go into. So I'm gonna put the the urgency meter onto passive, onto the patient one, right? And what I'm gonna have it do is have a limit that's at this here and have it below. And so I'll only get filled on anyone trying to get out of this position, like way down here, right? They're quite literally selling calls like somewhere in here. And so maybe it's gonna come back and tell me that no one is literally selling in here and they're only gonna be selling here, and so it'll make a decision. But I'm gonna try to catch someone that's, if this starts to sell down, I'm gonna try to catch someone down here, which will from that point be lower than this was from open. So these were not good open orders to buy net at all. Like, it wasn't even close to what I put in an order. It wasn't even close. Like I thought this would open way lower. It wasn't even close. So I'm gonna try to have IB hook me up with maybe some good contracts over there. We'll see how that goes. I mean, it could certainly go to the downside, but if my price point is so much lower, then who cares? Like, I will, it'll be worth it. So, and on the daily, it's certainly offering some ideas here. I think when you look at a candle like that, you really start to wonder some possibilities. And as soon as you have that speculation idea, then that's the go button. Hit the go button. Here, give me one sec, guys. Already. It's 11:10. We're in full lunge mode. Planet Fitness. Mentioned this move quite a few times. We took this trade here, right? It basically just turned into a day trade. This, again, short-term memory. Don't forget about what price does, right? Or what it can do. That may be a better phrase. Not only do you now have resistance levels to break here on the horizontal, you've got the trend line. You've got this trend line. Possibilities there. Not the greatest volume, but still. Do some hunting. MWK continues. In terms of the shorts, really didn't move as much as I expected, but I mean, they went about 3.5% to the low so far of today. Netflix, we go over here, looking a little bit better. Again, let me just do this now because those are wondering. When you short, it's the same as when we go long. So when we go long, we buy on support, right? If this was support, you'd be buying on support to go to the upside. When you're shorting, you sell, right? You sell from resistance. You sell on resistance. Or it would be the opposite. If you're buying puts, you buy puts on resistance. You buy calls on support, right? So it's the opposite. So this kind of move where it pulls into the level and then comes down is it's the same as when price is pulling back. So it opens and then pulls back towards support and then it goes, right? That kind of move, same thing here. You had close. What do we talk about with daily candles? You have one daily candle that pulls into a level, right? And then you have the second daily candle opens and then it's coming off the level, right? That's what happened today on Netflix. It's important to see that. And then if you go compare the two shorts with GoPro and Netflix, I want you to take a look at which trade would you have taken to go short, right? When you look at this, it should be very clear when you're thinking, because you're making the decision relatively quick, but you're still waiting, right? You're like actually being a little patient. It's not like an immediate thing. So if you look at the way that these candles developed, you'll see very clearly the difference between these. Even though GoPro opened up low, right? It made it very hard to short from over here. And we talk about that a lot. If price opens a little bit lower, we usually talk about it going bid to start, right? The same thing, just because we want to short it. Now over here, you have tightening. Now if this is tightening and then it breaks down, then that's the short opportunity. Just like when we talk about going long, you have tightening and then you look to enter it on the upside. This is, right now we're looking at is a little bit more bearish, so the plan is to do it to the other side, right? So again, it just depends what your plan is, which one you're looking for. If it broke to the upside, I wouldn't take the trade to the upside. But if it breaks down, I take the trade to the downside, because that's the plan, right? It's going according to plan. If it's not going according to plan, then we don't trade it, right? Because you don't know what's going on anymore. So again, just to mention this trade here, I think a lot of you saw this. I was very skeptical. I wasn't really sure if I wanted to post this chart last night or not, because I know when I post something like this, it kind of causes some, maybe indecision on other things. But a very good chart so far. Very good chart so far. And again, that's just one chart, so need multiple trades. CBAT denied. Yeah, CBAT bouncing back and forth here. A lot of volatility. Again, tough. Certainly the difficulty got upgraded in here. And again, this is volatility. This is a riskier trade. This is a 2.5% candle right here. This is a 5-minute candle. You get out of this position. So let's say you get stopped out of this position. That cannot stop anyone here from re-entering this trade. Don't care what happened, right? Let me show you the daily. I talked about it at open. More than likely, you're bouncing on support today. We tried to take the upside trade, got stopped out. This is the trade that we want. We want to see this converging level supply. Now, it doesn't need to break through. We don't always, when we see the converging levels, we think of it breaking through those levels. No, that's just really strong support here. That's why when it does break through, we talk about it making such a big move, because while it broke through a lot of supply, then it must be a big move. It can be the same reason why it's going to bounce here. We're going to be active on this type of trade. There's a lot of volatility, so you have to be active. Things are not always going to go the way you want every time. There's variance. But when you do capture the move, it's a big move, which is why we get stopped out for small. We minimize downside, maximize upside. You can't maximize upside if you don't get in the trade, right? You don't put some risk. You don't put your money in the market. You can't make money in the market, right? So you just have to take that trade. You get stopped out, you take it again. You get back up, right? TGT, that's an interesting idea. Again, retail stores looking very good. We get the trend line in here. This was a pretty long trend line, right? In terms of swinging back and forth, there's not really a local level up here in terms of like a horizontal supply level, but basically just trend lines. I don't know if it's, I mean, maybe it's possible you can do something like this, but it doesn't really add up to what we see so far. Maybe you can get away with doing this. I'll like dot this in here. Maybe you can get away with this idea, but I would say that it's more of a remove some of the ideas in here and think about it as this trend up to here. Now it's consolidating, right? It's just sort of flagging a little bit, but not really a rally flag. It's just sort of consolidating downwards. There's some trend line ideas in here, right? These type of trend lines. I would say the move will be obvious. It's a good example of a chart that the move will be obvious. The move will be obvious. So again, it's just trend lines on this chart. Certainly a trend line in there, right? Trend line in there. This is almost, it's very similar to those continuation triangles that when it breaks, then it consolidates again on top of the trend line. This might actually be a better example there. I'm going to delete this because it's like a really long-term macro. This idea in here, I think, is probably a really good way to look at the chart. This candle, again, sometimes this is going to happen. This is the open, so it sort of opened on a gap, but it went bid from the start, sort of removing any possibility of it, being like a true breakdown. So that removed it. It went bid. So this looks a lot more accurate in here. And I would say that's the trend. So again, that's the level right there. No one looks dumb with the X in there, but I'm just trying to extend the trend lines through here. I mean, there's 3 wicks on both sides. We talk about this sometimes where when you take that trend from a prior time and then transpose it the other way, you get the same sort of touches. So these 3 here and these 3 here, this idea of that trend is very similar in that it confirmed it in the same way. So I'd say these are probably pretty strong trend lines, and it also confirmed over here. So it's an interesting trade, and again, it's a sector trade. It's a sector trade with retail stores, which we've sort of combined together now, right? So it's a good one to definitely be ready for. Again, lunch pullback. We'll see what the support bounce is in here. I expect a melt up day, like a melt up lunch. So even, I know we're down on the day. That's just from the open. I expect the intraday to be a melt, unless we start a larger consolidation like this over here. But this was a little bit more to be expected on the value side when we talked about the candles already, right? We talked about if this candle opens low, then we're going to sell it. Everyone else obviously has the same mentality. Where's this going to go? There's no support. There is no support. Absolutely no support. So, again, that can definitely sell. And we talked about it. When the move comes, it's going to be violent. So those of you that are now all of a sudden going, oh, God, holy shit, good thing, like Ecto said, I got no stop. If you didn't already get stopped out, then you need to find out where is your stop, and do I need to place a stop now? There is no support there. Now, again, these charts, a lot stronger. Qs have support here, have support there. So we'll see what that looks like. Could be interesting to see what happens right here. There are opportunities that arise there if there's a bounce, but certainly see some selling here. But again, don't sleep on your other positions that are not tracking the market whatsoever. Don't hit your like sell all button when you have like half your positions need to be taking profit on, when the other half are like they're in la la land. we'll see what this move looks like here. And again, depending on where some of these things bounce, it can cause other, like, so for instance, Russell 2000 doesn't have any support here, but if the rest of the market bounces somewhere, then this will just react as well, right? So keep that in mind as well. Because again, you do have opportunities that arise here that this may not be breaking down and consolidating. It might actually just whip if the rest of the market does. So keep those ideas in mind. And again, we see this tied with the dollar and volatility here, right? So this was earlier, and we talked about how this was not backing up any idea. Then this crept back up, and now, again, you need the movement. It's not the value here, it's the movement. And again, if you look at the derivative, this has not changed. So again, you're not getting any signal of, you're literally not getting a signal of anything in volatility, which it's really hard to trust in price movement if you're not getting a signal anywhere else. We're not getting flows in the macro sense. We're getting no outflow because we don't see anything inflowing, and we don't see any move on volatility, which makes things really hard to... Is this making a move? No, it just opened lower. Is this making a move? Well, this is always more extreme one way or the other, right? Upside is extreme, downside is extreme. 2% is, on a technical basis, not very much here, but this was to be expected due to the candle formation, which we talked about, right? It broke the trend line, and since it opened lower, people will sell, just like we talked about pre-market, right? And again, look at some of these positions that are reacting. If you missed, like the CBAT position, if you missed this here, this is your buy opportunity now today. Maybe it was your first buy opportunity today, right? You gotta take these in relation and understand. And again, this is probably the hardest part of trading, is knowing, oh, I can buy there. Oh, I can. Oh. Right. It's just something you just gotta get through, right? Not to shit your pants every time there's a red candle. Or care that it's going one way or the other. I think everyone thinks that the market has to go up all the time. Now, this trade, if you guys remember over here, I talked about if it breaks this resistance and goes to the upside, we're taking that trade up here. And it got rejected. Never was able to get to that upside. We talked about this move that would happen if it got through here. Got stuck. This is something not to have short-term memory on either, because it could, there could be a lot of reasons why the supply overtook demand here. We knew there was a resistance here, but that could have, we might have been able to fill some of that. Right? And so that next move, this candle's already sort of signaling a reversal. Keep that idea in mind, maybe going into the weekend. I'll remind you. That candle looks so strange on that chart. Okay, we're not seeing that still. Okay, let's bring it over to tech. Let me show you this move. Again, it's holding the support here. That Amazon play that you guys wanted me to get, where we're now getting into break-even territory. Again, the long position. You know what's great about a long position is that any sort of move does nothing to the position. That's why we take long positions and not significantly out of the money ones. At the monies. These should do well during, the thing is that volatility is not actually breaking. So some of the tech is not going to get that move that you'd expect with some volatility. Let's see. We're going to see if this makes a move to the downside here. Let me just see you can see the dollar's not getting the flow. So it's basically refuting a downside move, but this could certainly make a move with no correlation to the dollar. Since it's technically not a lot of money, It's just a large percent because of the caps, right? I love these violent moves, guys. This volatility with, I mean, the biggest sham is that the spot VIX is not higher, right? But we're getting it in IVs, right? We're getting it fully in IV. These kind of moves, for example, those travel positions, what you just did in terms of like some price movement here, just even just during a lunch pullback like this, you're you're jacking up your IVs significantly for a very small underlying price move, right? So it's not connected to your underlying, it's connected to like a market as a whole. And so you're causing IVs to increase a significant amount, and you're all that's going to happen here is that your exponential to the upside is getting larger and larger for just carrying the same position, which also makes it, which is a part of the reason why you need to get into position and capture, because now it's getting harder and harder to enter that position, right? Yeah, you can enter on a pullback, but now you're paying an even higher premium than it was at that same price before, right? Now it's the same price on the underlying, maybe not a very big difference in time, but now what just happened is the volatility is so much higher that it's a significantly higher price, right? Because for every additional point out of the money for strikes, and as that strike comes in the money, it's making a larger move on the exponential, right? Which is something you don't necessarily see with the delta, right? The delta's giving you an idea of how many points you're making against the underlying, but it's the volatility that's going to tell you how much money you're actually going to get in terms of a price move, right? When I show you those IV charts that I've been posting, those charts, they look like a V. Well, they're getting a little bit steeper right now, right? That's what's happening. A little bit steeper right now. Now, if CCL goes to 25, you're going to get probably twice as much as you would have gotten from a very small move. Not twice as much, but you know what I mean. See what we get here for a whip. Been watching. The best example is a lot of our positions, when they start to do that, when you watch the IVs just increase and then your position's getting larger while the underlying goes down, you know you're in for it. You're about to get your neck broken. I'd be watching those travel charts very closely. You're about to get a whip out of your bunghole on some of your options. Those CCL calls already just scary. Those algos calculate that IV so quickly. They calculate how much the volatility changes. I'm trying to do the math in my head. I'm like, okay, if I get, what's the theoretical price going to be here? The algos are like, don't worry about it. I know what's going to happen 10 minutes from now for the IV. I got no idea. Maybe I should bait them and just sell everything. Be like, now you're wrong. Thanks for the free money. It's a very good spot. If this holds here, it's a very good spot for us. Especially with we have 2 days here. Tail end of the week. If the tail end of the week's got a little bit more risk, a little bit more fear with it from this flat trading that we're doing, right? I know there's like, this is not like any price movement though. It's just swinging back and forth on the day. But what's happening is that volatility is so correlated to the downside right now that every time we get just a little bit of a swing that has no real risk, it's just increasing our IVs and premiums. So again, it's the benefit of being in position. Excuse me. And so you can swing up now and it won't change the IV. But if you swing down again, then it will increase the IV again. That's what the most screwed up part about volatility right now. That downside correlation, even though bid should be correlated with it as well. And it should pump a position like this. I didn't get to break even on those. So these sort of small swings like this, even though it's not very much on the underlying, it really does help with premiums. Even if it doesn't come immediately, you don't see the price. This coming into the support, if you miss this move beforehand, right, an obvious sell day from open. This move coming into support, though, one of those sleeper ones where you go, no, not. You look at it and you're like, wow, it's down 11% today. I'm gonna forget about that one. Okay, if you say so. Chegg on the trend line. I talked about this as well. If it's above this trend line and on the trend line, which it is, we'll see what this move is. There are certainly, I would not be buying this today unless somehow it makes a very obvious violent move. This would be a very nice trade for tomorrow. The fact that it already pulled in here should create, if it trades flat on this, it's going to be perfect for an entry tomorrow. I know it's kind of, it's down 9% today, but if it trades flat here on this level into tomorrow, you're just set up. No, it doesn't need to do that. Less probability of that happening, but certainly something we're going to watch for. OSTK, a move like this is going to be a good example of you're consolidating, right? You're consolidating a large move, but I know so many of you are already looking at this chart and going, well, that was it. It just moved 53% in 10 trading days. Okay? 54%. Of course it's going to consolidate. This is 8%, these two candles. Chill. Holy moly. But Don, it's up 120% and it's gone down 10% overall, or only 8%. 100 minus 8 is only 92%. I'm not comfortable with that. Good thing I exited. All right, big decision point here. Big decision point here, boys. Again, you get a trend line break here. It would be violent. You do have some ideas down here, but same with the Qs here. NASDAQ, it would be violent, that move there. The move here has just been a pretty normal pullback. The move after would be violent. That's the one we're watching for. Now, you're not getting confirmation again. It will show itself. This move has certainly shown what's happening here today so far. But if there is another move to come, it will show itself. So again, see how this is creeping up? So now your probability is getting higher and higher, but it will show itself. So you've got to keep these things in mind today. This can definitely be a lot of fun. This is what's going to separate your not only the idea of alpha, but for also just you guys personally comparing yourselves, whether or not you're going to be able to handle this week or not. Because there's going to be people this week that are going to make a significant amount of money, and people that are not, right? Based on this trading week where nothing's happening really, just kind of flat, maybe breaking down, or maybe just consolidating, right? During consolidation weeks in a market, those are the times when we get these other breakouts and breakdowns that are going to separate you, not only for the points you make, but for the points you don't lose. So for those of you that are not losing money against market that loses money, then you're winning, right? So you always want to keep that idea in mind that if the market's going down, as long as you break even, you didn't lose with it, then you're winning, right? And you're doing something right, because now what's going to happen when it now goes the other way, you're going to be making significantly more on that. So again, keep these ideas. Peloton floor. Is that like, what's the lowest it could go? We did talk about shorting this over here from the trend line. Oh, he's not in here. Sorry. Those you, I think we have one person that took the short here based on a DM. Short? Short? You said short? This is a fun one. So again, if you took, I didn't take this short. I mean, obviously I brought it up and it doesn't count if you don't do it. But, you know, that's certainly a neck breaker right there. This has no help. This has no help, just like over here. If you guys remember this one, this was 20% over here. I wouldn't doubt it. I wouldn't doubt it. Where's Hugh? Well, Hugh is on a new job. Hugh is on a new job. HMHC. He will be rejoining us soon. But yeah, he's on a big job, so he can't actually even be on here. Yeah, big boy job. Big boy job. Hugh is the intern. Hugh is the intern. All right. I love that price action over there. Let me show you some charts here. Netflix continues to the downside. This so far is almost at 2.5. G Pro talked about the tightening, right? The tightening, and now it's making the move. Keep that idea in mind for those of you that are trying to learn the sort of the nuances of the shorting side, right? The tightening, it's the same way as going long, and then as soon as it broke, then you have the opportunity. You have to wait for it, especially on the short side, right? No one's going to even... The demand won't come in until later, and then they'll get out early, right? It's a little bit more marginal. And for those of you that don't short or anything, again, like I said earlier, you're comparing yourself to the not losing money side, right? If you only trade long, then your winning situation is either making points on charts that are going to the upside or just not losing money on your portfolio in positions you already have, right? That's having stops in the right place. That's taking profit on reversals, understanding that the candle in the chart you were on, that the candle that was about to open today, if it started selling from the open, you'd be taking profit. We talk about those candles, right? That's what you're comparing yourself to. And another good example of a day that I talked about it yesterday, or I talked about it coming into the open here. I talked about yesterday that if yesterday, a break-even day, per break-even, didn't even lose any points on the market. If that hurt you, then a day that actually sells is going to hurt you. So you need to figure out the difference between these two and understand where you are. If you're in a long position, right? You're in SPY 400s for April. You're doing okay. You probably have lost 0.01%. Probably 0.01. I mean, 400's a little bit ridiculous, but for at the monies, you haven't lost anything on any move yet, right? What's the difference about having at the monies or out of the monies here? A significant difference, right? Let's say you've got April SPY 390s here from back over here. You are doing significantly well. If you've got February or March 390 or February March 390s, February's are junk. You're doing all right. March, you know, certainly not as good as the April, but if you've got March 400s or February 400s, your position is worth 0, right? Comparatively, because this move just erased everything you had, and it's a lot more violent and quick. That's why your IV graph looks like this, Oops. Looks more like that. Not an X, but you know what I mean. Wow, that's just terrible. There you go. Let me turn these extended lines off. Ivy looks like that, so as it moves, you're like, oh god. It'd be like having a canoe that's not round, but it's a V. That'd be pretty damn difficult. You'd be capsizing all the time. You'd be swinging back and forth, holding on for dear life. CSPR continues. Did we sell this today because of the market? The market's kind of red. Do I want to sell this position? No. Don't think so. Gonna get my free pillow for being a Casper Sleep owner. Big tech. See how the mega caps are doing better than the NASDAQ average here? Something to keep a note of. We just talked about how the NASDAQ is continuing to move to the upside with the mega caps being behind. Today, what happens when there's a little volatility? Everybody loves a mega cap. Why do we put risk on into Amazon? For a short term, we already have a long position on. Put some risk on in some mega caps because of a little bit of expectation on the volatility side, right? Something to note. That's how do you keep the profitability going on days of uncertainty? By making moves like that, right? Those gains will mitigate any losses that you had to get stopped out of. Maybe you had an entry that turned sour. The stop made you lose 10%. Those kind of things, you make up for it by making other, usually straightforward decisions, right? Understanding in the moment. Sometimes it's different every day. XLE thoughts. Let me tell you a little bit about Texas right now. In Texas, there's apparently some significant weather problems that have caused some serious energy outages. Over here, there has been a bit of a stop in the move because of some things that were happening in the current phase. Any movement here that happens due to what's happening in the now is going to go away, just like Texas's energy problems are going to go away as well. And people will have power again. Are people never going to get power again? If that's the reality, then this will go down. If people are going to have power again, then it's just like the news here only being a blip in the actual move. XLE, I have a chart for that, again, is a very long term and very high probability. There you go. That's my thoughts. Search XLE in the Discord. It'll be there. Google Sheet. Those of you not on the Google Sheet. I think there's like two new people. You're not on the Google Sheet. Request access. The link's in the thing. Get some of those charts so you don't have to ask every day. Not you, Febs. I'm talking about some of the other people. Looking for charts? Go look at the Google Sheet. All those charts are in there. There's like 2,000 charts in there. 5,000 other tickers. Too many. Can this guy stop posting charts? Jesus Christ. I'm just trying to enjoy my trading here. Psycho. What are you doing up till 4 in the morning doing charts for, dude? Market was going to be red today. Just sell everything. What are you doing? Just trade the same stock every day, obviously. Why don't you just trade SPY every day? Why don't you just day trade and scalp these moves every day? Wouldn't that be better? Obviously. See, it's selling, so you buy here and sell down here, right? A lot going on down here. There's a lot going on down here. I have some ideas here. What do you guys think about some... I wish this came into... You know what? It kind of sucks that this chart didn't come into the support today. Maybe it will, but... Can we get away with drawing a new trend line in here? Is there a possibility? Is there a chance? I mean, that is also very close, but I think we've done that before. Actually, I have an idea. That's the Tesla weekly log chart, by the way. Looks like it's going one way to me. Oh god, 2 weeks of red. Oh god. Out of my 100% here. Nah, you gotta wait for the trend line. There's nothing you can do. I was gonna see if there's like a way to preempt that a little with risk, but I don't think you can do it. I don't think you can do it. Yeah, the risk just isn't there yet. Maybe Friday. Like, I think if this came into support, I think you're an immediate buyer for that trend line. The way that this formed from earlier, I think is 100%. Like, I'll be a buyer on that 100%. 100%. No matter what happens, however violent the move, I'll be a buyer there, and if I need to get stopped out immediately after, then I'll get stopped out immediately after. There's zero chance I will not buy that. So, I mean, yeah, if you're buying Tesla calls, you're basically going all in. So, when you're putting 10% on it, you're basically at that point going all in, because, I mean, you get stopped out immediately after, so you lose nothing. So, again, the funniest part is you can go put 10% of your portfolio on a trade here, get stopped out 1% lower because the spread's good enough, right? And you lost 1% of your 10%. That's pretty okay. The problem is, the reason why I just said that you can't do the risk today, the problem with taking it today is that, let's say you enter this trade here, you actually have a very high chance of a gap down tomorrow into the trend line, so you end up getting stopped significantly lower. You don't get stopped 1% lower like you would on a support here. You get stopped out significantly lower because of a gap situation. So that's the problem with taking the trade here. You put your stop in. If it happens when the market's not open, well, there's nothing you can do. Stops don't trigger when the market's not open. Sorry. So again, you have that gap problem, just like here today, right? That gap that happened today, you're much more likely to gap down here tomorrow. If it traded into the trend line, you are buying intraday 100% there. You've already confirmed it. The chances are just not as big of a chance. So tomorrow we will look, right? So again, we've made quite a bit of a move. We know it needs to consolidate a little bit, but there are reasons if there's enough cash available to put that position on. So those of you that do want to make that trade again for what technically is probably easy money, but it's just easy because you put a big position on and then you get paid for it immediately. That's the only reason. It's like buying Amazon calls. It's easy because you follow some simple rules. Oh, it's there. Okay, I'll go put a $30,000 position on, make 10 grand in 10 minutes. Okay. Instead of having to buy like 30 calls of this, 20 calls of that, 40 calls of this, and it takes 2 weeks to make some money, and you gotta manage it. One trade, one profit. CSPR is getting some wide spreads in here now. We'll see what this looks like. The idea of a stop is somewhere around here. Somewhere around here. I don't know if it's 10. Maybe it's 10. That one's a let her go. Like I said, get a lot of points you can lose there first for further upside. I am going to mention some of the differences between. It's not the chart I want. Some of the differences between some of the energy companies, like we talked about earlier. Here's the treasuries, by the way. Again, we inversed this once this happened. I talked about the short here. I actually don't. Oh, I put it on the other chart. Talked about treasuries being short because, again, everyone's selling treasuries. TSCO obviously continued from earlier. We talked about that at open. This trade through here. Where's the trend line? Okay. Not sure what's going on there. Talked about this trade through the trend line. Now it's in a channel. Looks very good. IMAX continues from yesterday, holding value. It's a very interesting chart. But yeah, some of those energy companies are not trading like exactly with the rest of the market. Keep those ideas in mind. Can we look for those? I mean, there really is quite a few more points on this IMAX chart. Didn't really think about it. I don't. Why? What were we doing over here? I don't know. Is this because the way the market we were trading it, or what? I guess I didn't really tie in the China idea with this. I didn't. The reason why this broke out is because IMAX on the Hang Seng took off, and so then it copied it. I don't know why I didn't register this as like a Chinese sort of thing. What did I do here? I don't know. I screwed up somehow. I mean, that's really clear there. Maybe because it's just too short. I actually don't know. Shouldn't have missed this trade. I don't know what I was looking at in here. I obviously look at every chart every single day. So those of you that also don't know, every single day, so 4 o'clock when we start the call, right? Then and thereafter, from there until, midnight, I'm looking through tickers. I'm just clicking through all day, looking for charts, all day, writing down the short-term patterns. If I see a candle that's bullish or bearish, write down the candle, draw my trend lines, go into my broker, look at the options, add it into my broker, do all that shit for fucking hours and hours, right? So it's not like I didn't see that chart. But something obviously did not click. Also, I know some of you just saw some charts and you're like, what the fuck is going on that chart right now? And how are we not in that one? That's you, buddy. I'll go back to the Viacom one. But yeah, this was certainly a very good trade here, and we should have captured this move. It's really not okay for us not to have captured this move, I would say, based on everything that we do here. Only thing that would have stopped us is the horizontal resistance here, but we really should have got that. Kind of stupid. Again, banks. So I know a lot of you, when I post these charts, a lot of you forget about them. These ones. These are when I was doing weekly charts still. Again, weekly charts I will come back with, but for instance, like this kind of thing, that's just banks moving. You see something like Discovery continues, right? And you're like, what am I doing trading this dog shit when I could just trade Discovery to the upside, which I talked about so much over here, by the way, right? And I tried to trade it 100 different times for the upside move, and then we finally got it. Viacom, Remember when we took this trade and never have been able to get out of it, and I just have stopped the narrative of when am I ever going to get out of this position? Look at that. Who is that? Who is it? It's certainly none of you, because you don't trade like that. That's some big boys. That trend right there is big boys only club, right? These are really easy to miss. And this is why you have to be in position and find it beforehand, right? So when I post this chart over here and we get some little bit more volatility, a little bit more action, and other people are talking about it, you got to get it there, because then it's really hard to get in. Other than this move here, you could have got on. Brian says Amazon doesn't give a fuck. Amazon getting us paid. Good. You know, I like how I go, all right, give me a mega cap. We get the Facebook meme out of the way, and then everyone says Amazon. It's a great call. I mean, we did take this trade here for the long, but it's a great call here. And again, you should 33.50, I'd say, for the day. If you guys want to try to, I mean, I don't know if anyone else took the trade there, but that's what I'm looking to do the trade for the weekly. Like, I'm done after that, so we'll see what you guys come up with. But again, something to mention in terms of trades again, marginal trades. So this 1.5% to 2% possible move on Amazon, the points you can make on this play just here, this 1 day trade here, that idea will cover almost every single position you got stopped out on. So like LSU just mentioned, I just stopped out on most of my positions. This one trade will cover all of those. That's why I make a trade like this. You can't make a trade like this every day, because it's not every day that you stop out of a lot of positions, or you have a market that does that. This trade, so not only the trade from Friday over here, which is paying on a longer term schedule, which won't be realized for probably 2 weeks, 3 weeks, right? This trade that I'm going to realize here today, right? I'm going to realize the trade like actually today. That, when I look at my profit and loss at the end of the day, will cover all of the losses. So those of you that complain about having like a red day, when naturally you're going to have red days, right? So I'm not shitting on anybody, but I want to make sure it's clear. On those days that you're naturally going to have a red day in a long-term position, by making this short-term trade on that day, you remove that. And this is certainly, I mean, it's not emotional, but you're certainly doing it to cover the losses of the day. You're still doing that. But it's because you're jumping on an opportunity, which you should jump on no matter whether you're trying to cover lost positions or not, right? Sometimes we do go into the mode of, okay, to cover my lost positions, I'm going to put a short term on. The reason why I take this trade here is because I have risk to put on. Because of those long terms being less risk oriented, this short term trade that I'm going to get out of here today, which I have a target on, and if it doesn't reach the target, then I'll just get stopped out on. I'm allocating risk for that, which knowing that even though that's only like 1.5% to 2% on the underlying, guess what? That's like a 50% move on the option, maybe more, since it's fucking weekly, right? So keep these ideas in mind, because again, I think a lot of the times we get these situations where it feels like nothing goes your way, but that's one way to look at it. But it's also another way to look at it did you do enough? Disney dip buyers, that would be interesting. Let me look at the chart. This move was obviously violent. We talked about this trend and then this breaks here, but this kind of move could certainly, the way that it's trading to the downside, could certainly lead to some significant upside. This almost looks like a weekend position, not Weekend the Singer. Tomorrow looks like the day. Maybe look at the options now, see what those prices are for going into tomorrow, maybe close. Another possibility, again, we only trade on support buys or breakouts, but sometimes there's like a risk to preempt some of those moves. I don't know if this is specifically one until we see it, and I'm going to need to do a little bit. I haven't looked enough at that. I haven't looked enough at the options or volatility to know. Just know the chart. Something that I talked about yesterday, I want to make sure it gets remembered here today because I know people already forgot. When we talk about when you're transitioning from other, like let's say you had to take profit on like 25-30% of your positions today, maybe it's more. I talked about those winning positions that you have. Add that cash that you now have onto those positions that are doing well, right? Those positions that are doing well and continue to trend to the upside have continued movement in very minimal amounts of risk to the downside, right? It's probably going to be more risk than from where you entered, but it's still a minimal amount. Add to those positions, right? You know what those positions are, right? We just looked at that Viacom position, right? It's just trending, right? You're just adding on to a long position. There's a lot of better examples, but since we just saw this chart, a trade or a chart that's doing something like that, or like the Discovery one's like a good example because it's a little bit larger anyway. Just add on, right? You're not doing anything. If you're starting to like sit in cash and then no longer gain on it, and then you're like, well, I need to make, like I just gave you that Amazon idea of making a short-term trade to cover losses. So then you're like, oh man, I lost on a bunch of my positions. I better go throw this money into a gamble to cover my losses. Well, I lost 10 grand today. I better go make the 10 grand back right now. No. That's just fucking revenge trading for no reason. Like, you're being a pussy. Stop. That's like ridiculous trading, which I know some of you want to do probably. Some of you are looking and you're FOMOing because you missed the obvious trades and I already called you out for it. So now you're like, well, shit. Now I lost money on this other one. Now Don's going to be mad at me. I don't care if you make money or not. I want you to learn. That's what's important. Just learn and you'll be able to make it the next time. Next time you'll be able to tell everyone else that you made the trade when others didn't, right? Next time you'll make the airline trade. You'll make the bank trade. You'll make the energy trade. You'll make the bio play, right? Next time there's a lot of volatility, you'll be able to trade the healthcare tickers, right? Those type of things. Who cares about the rate today, right? Stay focused, keep working. I'm sure there's some sweaty palms out there right now. SBH. This is a good example of, again, we're aware of it and we're being patient. That resistance breaks. That's a great trade in there. Again, very similar. I know this is a bit more of the bottom wedge here, but that same idea where you get this trend line pressing into a resistance here. This is where you need to ignore this wick here. A lot of times we get this idea that we need to do this. That's too steep of a trend line, right? It's too steep of a trend line. It doesn't help. You're looking at this, okay? You're looking at this. You understand that there's this idea of a little bit, more sane of a trend, and also that it's this resistance that you've already had. So it's getting pressed into here. That's the breakout above here, right? It can trade in here all at once. The sooner it breaks out here, the bigger a move it's going to make, right? On this schedule. This pattern continues here. So it's the same pattern. This is not a new pattern. It's just price consolidating underneath the resistance where the sooner this breaks here as it moves, this is the apex here. If it broke out right here, it's not going to make a very big move. But if it breaks out in here somewhere, today, tomorrow, even Friday, I would say the latest, it's going to make a bigger move. So these are the kind of positions that, again, you don't think, you can't just all of a sudden now be trying to force something today. No, you need to find the positions that you can make money on tomorrow, right? And that's what we stay up all night trying to do, right? So like on today, like we knew which trades we're going to be making moves today, which albeit is not many so far, not many so far, right? So it's been more about mitigating losses today. But even that is a win, right? Even that is a win. This CBAT trade, again, buying on that support buy. The thing is that a lot of times you guys, down here in the corner, it says plus 2.66 today. So you look at it as that's the possibility, right? Even on the Google sheet that I have, right? With all the numbers on there, it just shows the closing date from the day I posted it. So it would be this close date to the next close date. but it doesn't actually talk about the real possibility, which was buy at the support. That's over 5.5% you could already be up on that trade. So if it comes back up here, that's 14.5%, which is not going to be shown on the daily percent gain, right? But guess what? The people that were in the position, they know the difference between the two, right? And it's important to realize that there is a difference between this and then buying here. This is where we wanted to buy the first time. This is what it gave us. We react, right? Keep grinding. Now, it is lunch. I think we've cooled down. We can take a break, right? This is coming back into the trend line, which is certainly a strength. There's certainly some strength to be noted here. And also sort of like this over here that I talked about. Very reminiscent of this over here. Some of these moves, I would say it's more this doji most likely. That doji move here, think about this, right? If you're trending up towards the end of the day, right? You've had a pullback during the day, and then you trend up from right now into close. What does that mean for tomorrow? Are people only trading for today, or are they trading for tomorrow? They're trading for the value tomorrow. If people are buying here, they expect it to be higher tomorrow. I know it's fucking straightforward, but reminder that if that is happening, then that's where people are expecting price to be. So keep that in mind during lunch, depending on what happens during lunch. It's been lunch, but I'm going to take a break here. I will see you guys at close. Again, understand what's happening here. Swinging back and forth, tightening. Moves will be made tomorrow and Friday. Today is not a move. Tomorrow and Friday will be moves. Those are almost guarantees due to volatility, where it is and how we know it's a little off. And there's not much moving today. A lot of break even. I would say about half of all the positions we're looking at are break even today. The other half being on the downside, right? Besides, obviously, these other charts, I mean, we are considering these the charts that were already trending up and breaking out anyway, so I don't really consider those as the charts we're watching. Those are already positions. So, of course, be more mindful of your downside compared. Like, don't be hunting for positions to go to the upside right now. Just be managing your positions, right? Your job is to be planning the night before and the morning before, not during the market hours. You're hunting and looking for trades. No, be managing. Manage your downside before you look for more upside. Always protect your account before you look for more. So I'll see you at close in a few hours. Enjoy your lunch. Drink some water. Get out of your chair. Do some stretching. I do have a few things to do, so I'll be here. So enjoy your lunch. I will see you in the evening. If not, I'll see you in the morning. Have a good one, boys.